All right. Good morning, everybody. Good morning, David B. Did that make sense? What I posted in there? Man, that was the perfect use of this classroom, David. Hey, Mark, here's a concept. Here's a read. I'm wondering if it's correct. Let's talk about it. And that's exactly what we're going to do today. So thank you for posting that. That'll be one of the lessons that we throw into there. We'll talk about it a little more at termination conditions, and we'll make sure that everybody's cool with what we're looking at. Good morning and happy Friday, everybody. My name is Mark Novak. This is the education room. This is where we're going to build a foundation. We are going to talk extensively about rules, the patterns. We're going to talk about what you see, the advantages they provide. And guys, we're going to talk about the chain of events that we're going to set into place. Starting small, starting basic, starting simple, allowing yourself to be a student, right? And then from that point, progressing into a completely different level of trading because your ability to do the things that you can do. Um, every morning I do this. This is my routine. Every morning I go to forexfactory.com and I look to see what the news releases for the days are. Today is Friday, June 23rd, and at 9:45 a.m. we have Flash Manufacturing PMI, Flash Services PMI. I'm not really concerned about what a Flash Manufacturing PMI is, but I see this red box. This red box lets me know that there is a potential high impact, which means that it may move the market erratically. It might move it too fast to trade. It might change directions on a dime. So just going through and checking Forex Factory every morning. I am. Can anyone else hear me? Guys, can you hear me? Okay, Alex, you can. Good. Only Alex can. Can anyone else hear me? Gary, you got me? Cool. All right. I always worry. There we go. So that's going to happen sometimes, guys. Sometimes your computer may shut down the audio. Sometimes my computer may shut down the audio. Anytime it seems too quiet and you see a screen moving over here, just ask me that question if I'm talking, and we'll do a little check and make sure that nobody misses anything. Um, so back to this, guys. We're looking at news releases. We're looking at when they happen, not so much what they are, but we're always trading statistical advantages, right? We're always trading advantages. Hey, good morning, Samuel. Nice to see you this morning. And when the market is erratic, when it moves all over the place, when it becomes unpredictable, guys, you lose a statistical advantage. So knowing when these are helps a lot. Hey, good morning, Bobby T. So put a note on a piece of paper, 9:45, high impact news. Have Siri set a reminder for you, something to let you know it might be time to go grab a cup of coffee, glass of water, toast a bagel, eat a waffle, whatever it is that you do in your little break time. Stretch your legs, do some yoga, whatever. Everything that I talk about, guys, comes from the education page. I can't stress it enough when I say that there are no secrets with Nexgen, guys. There are zero secrets. I have no desire to keep anything from you because your success is my number one priority. Um, so when I talk about rules, when we talk about looks, when we talk about all these things, whoops, we're doing it from the education page. We're doing it from, I need to open that in a new tab, from the tutorial section. This is going to help with your rules. This is going to help with the looks associated with the rules. And what we're going to talk about today in this first hour is really what we talk about every day in the first hour. And that's a high probability trend trade. And guys, a high probability trend trade means that every indicator on every chart agrees for the trade. Your triggers will be their strongest. There'll be nothing in the way between you and your targets, no termination conditions. Guys, this is the best of the best. This is a trade that doesn't happen all day, every day. You're not going to catch 50 high probability trend trades in a day. But if you focus on the high probability trend trade, if you give yourself 30 days to really focus on the advantages associated, what's going to happen is you're going to teach yourself, and I'm going to help you, learn how to read your charts, guys. And chart mastery is important. 90% of what you do throughout the day is really going to be reading charts. 90% of the day, you're going to be waiting for the advantages to present themselves. 10% of the day, you're going to be taking these advantages. And that's really going to be the focus, is recognizing advantages, recognizing when all your indicators on every chart agree. And then, guys, once you learn how to read your charts, once you understand where the market is likely to continue, and you're able to use that point for entries, where the market is likely to go, when you can manage these trades and take them to the furthest distance using momentum and Fibonacci, getting the absolute most out of each and every trade. And then when you understand where the market is likely to stop, the areas that may terminate a trend, the areas that may reverse the market. Guys, these likely to stop areas and your chart reading do two things. It keeps you out of trades into areas that might reverse the market, but even more importantly, is, guys, termination conditions that reverse the market create strength in the trade that follows it. John Novak did a great class yesterday looking for trades after termination conditions, guys. When you have an area that has stopped and reversed the market and you get one of those high probability trades after it, one of those high probability trend trades, that's your best of the best, guys. That's the trade that typically wins 70 to 80% of the time. That's the trade that creates confidence through the memory of success. That's the trade that's going to give you the skill set that you need to expand with the software, that's going to get you to that next level, that's probably going to put you in a position where you add medium probability trades to your plan. A medium probability trade. The expectation isn't that it wins as much as a high probability trade, but it still has an awful lot of advantages. A medium probability trade is defined when most of the indicators line up for a trade, however a small issue exists. Your ability to read your charts is going to have you identifying that small issue. This will be the vast majority of your trades, guys. What you're going to find is that when it's perfect, you will never miss it. And when it's not quite perfect, your chart reading is going to allow you to make decisions on whether or not it's advantageous to get in, guys. But when you execute a medium probability trade, you're going to have to take them and manage them assertively. Your ability to read your charts, your ability to take the information that the indicators are giving you in the moment, process it, that's going to allow you to manage it assertively. If there's trouble in your way, you're going to identify it through your chart reading, guys. These are the trades where you take quick profits. Medium probability trades aren't always home run trades. You may take quick profits at a trouble spot, get to a zero loss level, and be okay with a base hit now and then, guys. And it's these base hits that add up. If your daily goal is 250 per contract, a couple base hits gets you there pretty quick. So we're going to talk about the high probability trend trade first, and we're going to go from the high probability trend trade into looking at the medium probability trade throughout the day. But I'm going to remind you the path, and this is for you new guys. Samuel, K-Pops, David, as you grow, those of you that are coming back looking for consistency. This is the path to get to where you want to be, guys, and I always encourage you guys, participate in your education, right? This is college. This is you. I need you on the front row, hand raised, asking questions. Get the most for what you paid for tuition. Posting your trades in class. Good morning, Philly. Posting your trades in class. Posting your questions in class, guys. There's nothing that's off limits. Ask me anything. Ask me everything. And let me show you a great example of that. So this morning, David, in the middle of the night, I don't know what he's doing in the middle of the night, David said, "Hey, Mark, am I reading this chart correctly? Is my analysis where it needs to be?" And he's identifying things. He's taking a picture. He's showing me all these different things. And I like it because I know exactly where David's head's at. And then I replied in the room, "Hey, David," and if it's during classroom hours, I'll reply via the microphone. Let's go through and let's talk about a couple different things that are there on your chart that maybe you didn't see, and then we'll turn these into lessons throughout the days, guys. But if David never posts the question, he may never get the answers. So take advantage of having me available in this classroom, right? Take advantage of being able to get feedback 15 hours every week live. Post those trades and questions in the class, and then use the spreadsheet that Nexgen provided you. If you look in your Nexgen study picks folder, There is a spreadsheet that allows you to track your trades on the first page. It becomes your trade journal. Every time you take a trade, you can drop it into this trade link, right? What type of trade is it? When did you take it? How did you feel? Were the rules met? What were the conditions and what was the result? Guys, what you're doing is you're tracking your progress. You're looking at what you're doing every day. And then you can put notes out here. If it's perfect, mention that it's perfect. Mention that you never want to miss it. If you break a rule, it's okay to break a rule, especially on simulator. This is when you want to do it. But put in there, hey, I broke the rule. This is probably why it didn't work out as well as I had hoped. And if you take a moment every morning to go back and study what you did yesterday, you're going to be better today. What worked for you, right? When you traded with the rules 100% as they're taught in class, did you find a better level of success? When you broke those rules, did you tend to lose more? How did you feel? Were you confident? Were you nervous? Were you relaxed when you're following the rules? And when you broke them, did you find yourself nervous? Maybe letting hope fuel the fire a little bit. Guys, if you do this little historical study each and every morning, it will put you in a better mindset for the day. If you take the lessons from yesterday and apply them to today, you can't help but have forward progress. So use that spreadsheet. And then as you learn the rules, as you're developing your plan, as you're getting comfortable with the rules, every time the rules are met, whether you take the trade or whether somebody posts that trade in the classroom, steal it from the materials, maybe you're doing historical study, but start to fill that second page, guys. I have over 200, probably closer to 240 pictures of rules-based entries in my spreadsheet. And I give this spreadsheet to you guys about 3 times every day. I like to do it at the beginning of the class. Hopefully you're downloading it. And maybe you're just bypassing the little bit that's on yours and taking all of this information. Guys, take your weekend to click on these trades. Take the weekend to study these pictures, to be comfortable with it, to start building a recognition. Because when we talk about that path, you're going to post them in the room and get the feedback. Then you're going to go back and study them from your spreadsheet. And then my job each and every morning is to help you learn the trigger line and Fibonacci rules for when it's okay to trade. Guys, I say the same thing for the first hour every week. We talk about a high probability trend trade. We're going to associate the pictures. We're going to look at them. You guys are going to get these rules and then study them. And you studying them is the key. Simulating your trades, right? Practicing the rules, making sure that you're always taking the correct rules. And you're not going to know if you're taking the correct rules if you're not posting in class and asking for feedback. So guys, I want you to find your brave pants, put them on, and post those pictures. We're going to simplify. I'm a big fan of simplicity. What looks will you commit to, right? Your commitment should be to a rules-based trade. That's what you're going to commit to, but then you have to learn them so that they are easy. Guys, 240 pictures of entries really makes entries pretty easy. You just have to do that little bit of study. After class, before the next day, you can use market replay. You can replay the day. You can fix your mistakes. You can go through, skip the trades that you shouldn't have taken, take the trades that you skipped, building confidence through repetition, taking pictures of everything you do during the day, whether it's a chart read or a trade entry, trade exit, in the middle of the trade as you work on a management plan, taking pictures of scenarios where you don't take a trade because the rules aren't met. Guys, pictures add up and they create confidence. 15 pictures a day is 300 pictures a month, guys. I take 15 pictures before I ever get to this class. By the end of any given day, I'm typically around 30 to 40 pictures. There's lessons in every one of them. You're going to repeat this process every day until you always take the correct trades, because the correct trades mean that the rules were met, and the rules being met means that you have a trade that typically wins more than it loses. There's a statistical advantage. And then once you guarantee yourself you can win, because you're taking the correct trades, because you're on simulator winning more than you lose, following a plan, guys, that's when you start looking into Apex. That's when you start considering testing that plan on one of those prop firms and seeing how you react under pressure. So I talk about this path every day, guys. I'd love for you to embrace it. The people that embrace it get to where they want to be. The people that don't embrace it, that have to do it on their own because they're so darn smart, they typically come back after a lot of frustration and then they embrace it and then things tend to work out. That was my path. So we're going to talk about, in the first hour here, a high probability trend trade. A high probability trend trade only has 3 rules. Each one of these rules creates an advantage. And it creates this recipe for a trade. A trade is momentum, a clear path, and an entry area. And that's it. Don't overcomplicate it. A high probability trend trade only needs 2 charts. Whoops. What on earth did I do? There we go. A high probability trend trade only needs 2 charts to be successful with this trade. You're going to use a large chart to define direction. You're going to use this large chart to define momentum. That's rule number 1. When rule number 1 is met, you have the advantage of momentum. And you're going to define your areas using a large chart. Areas are going to determine whether or not rule number 2 is met, whether or not you have a clear path. This large chart is a broad stroke of a brush. It's like the general temperature of the market. It's showing the overall opinion of the people that are in charge. When the rules are met on the large chart, when rules 1 and 2, when you have the advantage of momentum, you have the advantage of a clear path, you're going to turn your attention to a small chart. And this small chart is going to refine that broad stroke of a brush. What happens in only 1 bar on the 13.2 happens typically in 15 to 30 bars on the smaller, faster chart. You're taking that broad stroke and you're refining it, and you're going to be able to pinpoint the area where the market is likely to continue. This is rule number 3 for entries. You're going to pinpoint it with such accuracy that you're going to use a limit order. You're going to wait for the market to come to you at that area. This is going to allow you to reduce risk. This is going to allow you to increase your profit potential. But rule number 3 happens on the smaller chart, and the smaller chart is an entry chart. You're going to define rules 1 and 2 on the large and then whittle it down to the smaller, faster. So I'm going to give you these rules, guys. I love it when you steal the pictures I put in the room. I put a lot of pictures in the room. There's your rules, and here's where they happen. And it seems pretty simple, right? A lot of people make the mistake of looking for areas to stop the market on a small chart rather than just an entry. So that's why I throw that out there. I'm going to close this out, guys, and we're going to start gauging advantages. The first advantage that you can give yourself happens on the large chart, and it's the advantage of simply knowing which direction the market's going. That rhymes, so you know it's good. Guys, if the background on your large chart is green, you're in an uptrend. There's a very clear advantage that comes. It depends on the market, K-pop. If you're using crude oil or the S&P, you're using a 13.2 and a 5.1. As you progress with the software and your analysis happens a little faster, if you decide to use the NASDAQ, because of the speed of the NASDAQ, you're actually going to use a 34.5 and a 13.2, but you're going to use it the exact same way that you use a 13.2 or a 5.1. We're using Fibonacci-based charts. We're using a large chart for the overall temperature, using a small chart for entry. The patterns that I teach, guys, they're not a 13.2 or a 34.5 pattern. They're large chart patterns and they're small chart patterns. And what you'll find is you can translate them anywhere. You could use a month chart for the overall. Maybe if you're looking to trade your stocks, that Tesla, Apple, something like that, using a higher time frame, and then whittling it down on maybe a weekly chart to look for your entry areas. So the patterns that I teach are going to translate everywhere. John Novak creates workspaces, and if you just go with those workspaces and trust them, there's been a lot of research that's been put into it. Great question. The background is green. Go up, right? Look for longs. Wait for the rules to be met for long trades. Go with the trend. If the background is red, you're in a downtrend, only looking for rules to be met for high probability trend trade short. Trading with the trend, guys. And I put that little note on there. What if you never fought the trend? I don't know about you guys, It would keep me out of an awful lot of trouble if I never fought the trend. Because when you fight the trend, you're forming an opinion. You've made the decision that the market should turn, sometimes from the middle of nowhere, because you'd rather it went down when everything says up, or you'd rather it went up. And opinions cost money each and every day. Once you have established the trend, we're going to look for momentum. Rule number 1 says that I have to have strong triggers. In an uptrend, when the background is green, strong triggers mean that these small triggers, the smaller, faster moving average, they're solid, are above the large triggers, the slower moving average, they're dashed. Small triggers are crossed up above the large. Both sets of triggers are wide and angled in the direction of the trend. And guys, there needs to be space between the two. The separation between these two triggers lets me know that the odds are favorable for the market to continue in the direction of the trend. Rule number 1, strong triggers gives you odds favorable momentum. When you have odds favorable momentum, this is the best look. When they're up, when they're wide, this is the best, most favorable look for buying a pullback on that smaller chart to one of those Fibonacci areas. And you'll see it on a large chart as a tail or a wick. What happens in this one bar on a smaller, faster chart with this momentum is typically a pullback right to our entry point, right to where the market is likely to continue. So committing to momentum, guys, eliminates a lot of troubles in your life, because that market is a absolute ton of force going to the upside, or on the other side of the coin, small triggers below the large triggers are wide angled in the direction of the trend. The space between the two, guys, you have an enormous amount of momentum to the downside because of that separation between the two. And this is the absolute most favorable look for selling a pullback on a smaller, faster chart to get you to that next area. So rule number 1, when it's met, when those triggers are strong, I have the advantage of momentum. I have a market that's likely to continue in the direction of the trend. The first part of the equation has been met. 1/3 of my rules are fulfilled with this strong triggers. Guys, is everybody okay with this look? It becomes really easy to recognize, and let me open up just this chart. Smalls above the large are wide, they're angled in the direction of the trend. There's some of those tails, right? If we scroll back a little bit, looks like NASDAQ dropped an awful lot this morning. Smalls below the large are wide, there's those tails. Everything is up, there's those tails. Guys, get to the point to where you can recognize odds favorable momentum in just a moment. If the large are down and the small are up, we don't have momentum, guys. Rule number 1 hasn't been met. Don't have the advantage of momentum, therefore we're not looking for a trade. Once I have those strong triggers, the second part of the equation says that termination conditions must be false on the large chart. Whether it's a 13.2, a 34.5, a monthly, a yearly, a minute, a tick, it doesn't matter. My large chart must have nothing in the way, no termination conditions. And no termination conditions means that the market hasn't reached an area that may reverse the market. Guys, a Fibonacci-based indicator that may reverse the market is what we're trying to avoid here. So, what are the areas? And for you new users, this is a great roadmap of what you're looking at in the market. Areas that may reverse the market. Jose, did that definition make sense? And I put a picture below it as well, and we can talk about it during the day. It's good recognition of overrun. And we'll talk about that when we talk about termination conditions. Guys, the areas that may reverse the market are a divergence high. This magenta line that prints when a pivot loses momentum. If the market goes up and then down and your indicators in the background doing all those calculations determine that there is a loss of momentum in the market, this magenta line will print. A divergence low means that there was a loss of momentum from a low pivot when the market went down and then up. In this divergence low, the cyan line will print. We're also looking for red Fibonacci resistance and blue Fibonacci support, yellow 1-to-1s, and there will be instances where the midband can act as a termination condition. Safia, I think you put a question in there earlier about using the midband. right? So we can talk about that mid-band a little bit today. When it is a termination condition, it's a really easy recipe to determine when it's likely to hold and when it's not, and we'll go into that a little bit today. Guys, your great questions create awesome classes. They really do, because you'll get everything that you need. So these are your areas. In order to determine whether or not an area is a termination condition, we're going to keep it super simple, guys. Two things have to happen. The first thing is price reaches the area. And I've got some pictures of termination conditions. We'll look at the rules real quick. To determine a termination condition, price must reach the area, and if it's a high, if you're trading up into one of these areas, the triggers must remain below. Large chart or small chart, Mike? On the 5-1, absolutely. That's why it's one of the areas that we use for entry. Pretty cool, right? Price reaches an area, the trigger lines remain below. Guys, this is how you're going to recognize a termination condition as the market is trending up. Here we have one of those pivots with a loss of momentum, and it creates a magenta line. Guys, this pivot on its own is not a termination condition because price didn't reach an area. And this is a very key concept. This is just a pivot. There was a little bit of loss of momentum. Don't give it more power than it deserves, guys. If it's out in the middle of nowhere, it may push the market down a little bit. But when price reaches that divergence high and all of the trigger lines remain below, now it's a termination condition. Does that make sense? Just a pivot, and then we'll use that divergence high. Price reaches it, trigger lines remain below. Now it's a termination condition. And guys, this is what we call a pivot stop out. And a pivot stop out means that the pivot was formed. Price exceeds it a couple ticks, triggers remain below, and then the market heads the other way. David B., in order to have a pivot stop out, you have to have a previous pivot. That was one of the questions earlier today, I think. Price reaches resistance. All of your trigger lines remain below. Guys, this is a termination condition. No more long trades. That's all it means. It doesn't mean go short. It just means sit on your hands for a second. These areas will either break or they'll hold, but when price reaches it and the triggers are below, we don't know which it'll be. Rule number 2 says sit on your hands. You don't have a clear path. Price reaches 1-to-1s. All of the trigger lines remain below, directly into a termination condition. From a low, it's the exact same recipe. Price reaches the area. Guys, this has to happen first. If price has not reached the area, that area is a target. It's not a termination condition. When price reaches these 1-to-1s and all the trigger lines remain below, or above, this is a termination condition. Price reaches support, trigger lines remain above, termination condition. There's one of those pivots, not a termination condition, right? Just a pivot with a loss of momentum. But when price comes and retests, reaches that line, the trigger lines remain above. Now this divergence low is behaving as a termination condition. And we call that a pivot stop out of a divergence low, guys. And this is a termination condition. It may reverse the market. Guys, when your termination condition does reverse the market, we call it a strong bottom. If price reaches and none of the triggers break, and that market goes the other direction. Large turn green gives you odds favorable. Guys, this is a termination condition, creates a full reversal. This is a strong bottom or a good bottom. This tail with odds favorable momentum is your highest probability trend trade. From a high, when this termination condition creates the full reversal, you catch that rules met, high probability trend trade, that's your best chance of success. So initially, I want you guys to keep it super simple. If price reaches an area and absolutely no trigger lines break through that area, it's a termination condition. No more trades into that area. Rule number 2 says let the area break. That area is considered broken. That path is considered clear. when both the small and the large get to the other side. You can see that we reach resistance, triggers remain below, we're not taking a trade into that area, but when the small and the large get to the other side, you see that there's odds favorable momentum. There's one of those tails, guys. There's one of those potential pullbacks, giving you an opportunity to take a trade because now you have a clear path. This is the most simple approach to understanding termination conditions. Letting it stay simple, looking at the areas, determining whether or not the trigger lines have broken as price reaches, guys. The area holds, no more short trades until it either breaks or the market rolls. Up at the top, price reached support and all your trigger lines were way up off my screen in the distance. No more short trades. Guys, areas break. Strong triggers tend to break areas. When the small and the large get through the area, now support is broken. And now support becomes resistance. And you can see price pulls right back to that resistance. There's one of those tails, and it finishes the move with momentum down to support. I'm going to teach you, you're going to learn how to find this entry, how to take advantage of this look. Here's one of those pivot stop outs. Divergence creates that cyan line to the right. It's just a pivot with a loss of momentum. The trigger lines have overrun. Everything has kind of made it through support almost. Just a pivot, and that loss of momentum pushes the market up. But when the market comes down to that divergence low, when price reaches it, exceeds it a few ticks, the trigger lines don't follow. Now I have a pivot stop out of a prior divergence line. You'll see it from lows. You'll also see it from highs. And guys, when it happens at Fibonacci, it is even more powerful. When you get that pivot stop out right at a key area, that's a market mover typically. You can expect bigger moves going the other direction. This adds power to that great top. Big fan of this picture because price reaches resistance, no trigger lines break through. Resistance is a termination condition. There's not a clear path, no more long trades. Price pulls all the way back to support. Absolutely no trigger lines break through. Support is acting as a termination condition. No short trades, even though the trend is down, even though the smalls are below the large, because we've reached an area that may stop the market. Guys, 90% of what you do is just waiting for those advantages. When the market ultimately pushes up, hits those resistance, that pivot stop out is created, the market reverses, the odds favorable momentum is present, and that path is clear. Guys, now you have a strong top that created a full reversal, giving you the best of the best, that advantage to get to the next area. Price reaches support. No trigger lines break. Look at the bounce that it creates, guys. You're going to see this every day. Keeps you safe from taking that short, from getting stopped out. When this termination creates a full reversal, price reaches, zero triggers through, creates the full reversal, ultimately gives us a clear path and the small outside of the large. Guys, there's that best of the best look. That's your highest probability trade. That's that trade that typically wins 70 to 80%. That's that trade that has the advantage of momentum and a clear path, and that entry that we're going to look for. Guys, I love to ask in the room because it helps me to know where you're at. So I'm going to ask Samuel, Philly, Tan, K-Pops. Guys, is everybody good with this? If price reaches an area the triggers don't go through, just sit on your hands, right? Give it a minute. Price reaches resistance, no triggers go through, it might break. But you don't have to guess. Look at that pivot stop out to the tick. No triggers, and look what happens. There's a pivot stop out, no triggers, keeps you out of the long. Guys, there's so many opportunities. There's that odds favorable momentum. There's those tails. Guys, price reaches support. Weak triggers, they can't break. That support ultimately holds. Small and large break this area of support. Look how the market pulls back, uses it as resistance. You see this over and over, guys. Price reaches the area, zero triggers. That's what set off that big move down. This is your safety piece. No more long trades. You don't have to hope. Look at how support holds. And it's a pivot stop out. Boom, all the way next to the next key Fibonacci area. Guys, all you have to do is scroll through your charts just for a minute, and you're going to develop that trust. You're going to say, holy smokes, no reason to trade into resistance with no trigger lines through. I'll wait for it to reverse. I'll wait for odds favorable momentum. I'm going to capitalize and take it all the way down. Guys, we just saw like 20 examples. Price reaches support, absolutely no trigger lines have broken through, not going short. And we didn't go long up here. We're waiting for the clear path. 90% of what we do during the day. Gosh, that was a lot of great examples. One market, one day, the last 3 hours, guys. Every lesson you need to recognize this to help keep you safe. You're developing trust through seeing this happen over and over. So that's with areas. There are going to be termination conditions when the areas aren't present. Maybe everything is overrun. Maybe you even have odds favorable momentum. Remember that your large chart is a slow chart. Hey, Debbie, happy Friday to you. What happens in one bar is going to happen in multiple bars on a smaller, faster chart. There is one termination condition that I will look for on the 5-1. And I'm going to type it in all caps. This is the only termination condition I will look for on the 5-1. And it's 3 divergences in the same location. 3 divergences in the same location may terminate the trend. Notice that we use the phrase may. We don't say it definitely will terminate the trend. It's an absolute guaranteed to happen. Guys, it may terminate the trend. 3 losses of momentum in the same price range might make that market go the other direction. It becomes even more powerful when those small triggers work their way inside of the large. Now we have anything can happen triggers, weekend triggers on that small chart, and it's coupled with 3 losses of momentum. Guys, you can add more fuel to the fire if that third pivot is higher than the previous from a low or lower than the previous from a high. It's a head and shoulders pattern. It means that not only are you losing momentum, but price can't even make it past the previous pivot. Guys, this look from a low and this look from a high is going to help you identify instances where this market might be reversing even though it hasn't reached a key Fibonacci area. What you're also going to recognize is when you have a pivot that creates a reversal, it's not a strong bottom. It's just a pivot that creates a reversal. And when you have a weak bottom, a lot of times you're going to see the market continue down to that next key Fibonacci area. It happens a lot. So guys, 3 divergences in the same location may help you identify change on the larger chart before you actually see it there. There was that final termination condition, right? The mid-band. A large chart mid-band can act as a termination condition. And guys, it does it. You have to look at your trigger lines, and just like any other termination condition, price has to reach that area. Guys, if price reaches a large chart mid-band, and your large triggers remain a full bar away, meaning that those large triggers are above the reversal bar marker, that white line on your 13.2, on your 34.5, whatever the market may be. If price reaches this area and the large triggers remain a full bar away, price very often snaps back and closes that gap to the triggers. It's called the gap theory, and you're going to hear me talking about it in class. If the large triggers are a full bar away and price reaches that mid-band, guys, we're not taking short trades. This may act as a termination condition. Sophia, does that make sense? Because it's acting as a termination condition, guys, because it may close the gap back to those triggers, any short trades that you take in between the bottom of that price bar and those large triggers is likely to get run over. When does this mid-band become even more significant? When the pivot that gets priced there is coming from a bad top. When it's not a termination condition that creates a full reversal, the mid-band is more likely to hold. Even more likely to hold if the large triggers are a full bar away. Thank you, Bobby. Guys, news in 5. So let's go back and look and see if we can find some examples. So whether it's above or below, right? Let's see if we can find some instances where that happened. Price comes all the way right to the midband, right to support. Do you see how the large triggers are still a full bar away? And what does it do? It closes the gap right to those triggers, even coming from a termination condition. Price reaches the area, closes the gap because they're a full bar away, and then that market moves. And guys, this keeps you out of shorts. It doesn't necessarily get you looking for a long. It just happened on crude. It's hard to see it on that one without it being in the moment. But if we scroll back, there it is again. Let's look. Price accelerates away from the large triggers even without the midband. It closes the gap to those large triggers. If I scroll back and I'm looking for midbands, guys, we're just looking for this phenomenon. Price reaches Fibonacci support. Large triggers are a full bar away. It closes the gap. Price reaches resistance. Large triggers are a full bar away. It closes the gap. You see this so often. And you'll see this so often, guys, that if I take all of these areas off of my chart, you'll begin to start identifying, even without the areas. Do you see how it accelerated away and closed the gap? Very likely an area of resistance that caused that bounce. Price accelerates away, the large triggers don't follow. Guys, watch this. I'm going to put my indicators back on. Dollars to donuts, it was either resistance or a mid-band right at the top of that pivot where the triggers didn't follow. Let's see. I know I didn't study this before, but the gap theory lets me recognize when that gap may be closed. And there it goes, guys, right into resistance from a bad bottom. And it ultimately finishes the move down. So guys, this is just a pattern that you're going to recognize. Bad bottom, once again, right? Pulls all the way up to resistance, almost to those one-to-ones. The large triggers don't blink, and it continues down to Fibonacci support. You're going to learn how to take advantage of this. And you're going to be able to figure out when it happens, when you have odds favorable, when there's no termination conditions, it creates an opportunity to look for entries, guys. So we're going to figure out when the advantages are in place, when I have the advantage of momentum, when I have the advantage of a clear path, guys, let's find your entry area. Let's refine that broad stroke of a brush, go to a smaller chart, and pinpoint with unbelievable accuracy where the market is likely to continue. Is this a termination condition? Where are we pointing? Is it a termination condition when price reaches an area and no trigger lines break through? Absolutely it is. Which one are we talking about, Sophie? Are we talking about the high? Or are we talking about this fib? Or are we talking about both? At the midband? Right here, absolutely, because look how far away the large triggers are. Does that make sense? What do you read into? Well, there's a lot of information on this chart, so let me whittle it down a little bit, and we'll talk about the termination conditions, right? So here, price reaches resistance. No trigger lines break through, right? No, you're okay. Price reaches resistance, absolutely no trigger lines break through. So this is a termination condition on its own anyway, right? The midband is also behaving as a termination condition because the large triggers are a full bar away. So not only do we have textbook termination conditions with that simple process, price reaches, no trigger lines break, we've added even more certainty to it because the large triggers didn't follow. Does that make sense? So that handles this area. Price pulls all the way back to support, all the way back to those large triggers. The large triggers, smalls are above, large are below, nothing really going on. And then it reaches resistance a second time, and those trigger lines can't do anything. The large are above, but both are below this resistance. And even though there's not a full gap, we respect it. This termination condition creates a full reversal. This full reversal gives odds favorable momentum. Now we're looking for those rules to be met for more continuation down. And do you notice that it's a bad bottom? It's not a great bottom. It's not a strong bottom that takes us up into that area. The trigger lines don't follow, and then ultimately the market continues down. This is a great pattern, Safia, and it's great recognition. So absolutely, the mid-band's behaving as a termination condition. Cool. Great question. And guys, once you can define these, right? Once you can recognize momentum, it's going to take you, what, 3 minutes to understand that when there's separation between the two, it's go time? And then you're going to spend a couple days working on those termination conditions, making sure that you understand when an area is likely to hold. And guys, price reaches the mid-band. Large triggers are a full bar away. See how they're right there all the way at those reversal bars? This says the market may close the gap. Not guaranteed, but may close the gap. Bobby T, thank you for that picture. That alone is enough to keep me from trying to get in at 66 because it may close the gap all the way down to 55. I don't know if it did, but it may. And then Joel coming in just to reinforce the lesson. Price accelerates away, gets right to resistance. Large triggers are about a full bar away. And it closes the gap, right? And notice that it's coming from a bad bottom. Awesome. Safia, cool. Glad you got it. Hopefully everyone else is getting it too. This really is the greatest thing about this classroom. One person asks a question, everybody gets a lesson. And guys, I will let you set the tone for the class each and every day. But before we add anything else in, let's talk about an entry area. When you have the advantage of momentum, when you have that clear path, your work is done on the large chart. Now we're going to turn our attention to the smaller chart, to the faster chart, to the refinement chart. When the rules are met on the large chart, the 13.2, the 34.5, whatever the case may be, this will be look on your 5.1, on your smaller chart. This is when you've made the decision that it's time to look for an entry. Everything says up. Things that I'm noticing, my smalls are above the large. That odds favorable momentum is universal. This is a great look. This builds confidence. My large triggers are wide. They're angled in the direction of the trend. Guys, your absolute best look is what we call favorable large triggers. Favorable large triggers mean that your large and synthetic are overlapping one on top of the other, right? Your synthetic triggers are those 13.2 large triggers. And then the large triggers are your 5.1. Guys, when they're one on top of the other, you create the smallest window of opportunity. You create the tightest, the least amount of risk. When they're split, it becomes difficult to recognize whether or not the market is going to go to the top triggers, to the large triggers, or if it's going to go to the small triggers. In the beginning, when they're split like this, it takes away an advantage because it may close the gap to the synthetics. John Novak gave us a great lesson on that, which means that you're going to have to manage assertively. You're going to have to let it close that gap. If you get in here, 3 divergences in the same location says it's probably going to close the gap. And look how it does it almost to the tick. Until you can read your charts fast enough to manage out of this trade, it's better to let it close the gap. It's better to wait for those triggers to be favorable. Can I show you how to set up the enter up FARS as SLTP? Oh, stop loss targets. Okay. I was like, man, what does that mean? Absolutely. Philly, can we do it after we finish the entry rules? Because you got to know how to get in, right? Are you on NinjaTrader 7 or 8? You're on 8? Cool. Let me open up my 8 then. I'll get that opening up. And that way we can do it on 8 and get you all the information that you need. But first, let's figure out how to decide where we have to enter, right? When everything says up, guys, we're looking at favorable large triggers, strong triggers, everything says up. You're going to look for the areas that are going to fall inside of those large triggers, guys. Trend trades come from 3 areas or any combination of those 3 areas. Trend trades originate at fibs, mid bands, and yellow 1-to-1s. Fibs, mid bands, yellow 1-to-1s. Mike M pointed out earlier, he goes, man, there's a lot of trades that come from that mid band. There most certainly are. That's why it's one of the areas that we trade from. When everything says up, you've made the decision to take a trade, but rule number 3 says that we're going to use a limit order, meaning that we're going to wait for the market to come to us. And we're going to use a limit order to buy or sell a pullback. And guys, a pullback is nothing more than a small retracement in price that's counter to the underlying trend. If everything is going up, we're going to count on the market to come down to us. If the large crowd, the large opinion, says everything is going up, says that we have momentum, says that there's absolutely nothing in the way, guys, look at all those circles on those tails. We're going to let those yahoos that want to fight the trend, that want to fight momentum, that want to fight everything the large crowd is doing, they're going to force a pullback. They're going to give us that little bit of push down, guys. And that little bit of push down begins with a reversal bar. So when everything says up, your charts are green, your triggers are green, your mid band's green, the triggers are favorable, everything says go to the upside. We're going to wait for a down bar, guys. And at the time of this down bar, you're going to create a window of opportunity. And your window of opportunity is going to extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. You're going to right click, you're going to activate a limit order, and you're going to wait and see if that market comes back to you. And if it does, if it retraces that little pullback counter to the underlying trend, if it retraces to that highest point of support inside of those favorable large triggers, guys, you're in a long trade. You're in a long trade with the advantage of momentum. You're in a long trade with the advantage of a clear path, and you're in a long trade with the advantage of having entered the area where the market is most likely to continue. If there's a strong trend that just started, why is it not advised to jump in before the pullback? Samuel, so what I'm teaching right now, and this is a great question, what I'm teaching is your highest probability of success, right? The trade that has been proven, back-tested to win more than it loses, the one that is going to create confidence through repetition. Samuel, you're going to see this is when everything is its absolute strongest, and it still pulls back. There's going to be times, and Ron, have you posted a trade today? When you understand the concepts of odds favorable momentum, when you understand the concept of a clear path, you may adjust your plan a little bit. Samuel, you might find yourself in a position where you want to get into that market with that momentum. And we have a gentleman in this room, Ron, says that when everything is fast, when everything is strong, when that everything is clear, he does exactly what you said. He takes a little snippet out, right? Fierce triggers, good momentum, little bit of room to the target. Backside of price must clear the previous area. Ron is giving you his recipe for success. But if you don't understand momentum, if you don't understand clear paths, Ron's trades are kind of hard to catch, right? Because there's some mistakes to be made. So focus on this best, focus on this simple, focus on this time-tested, proven, and it's going to give you the skill set that you need to expand your plan, right? Guys, you have every advantage in this trade right here. You have the advantage of momentum, the advantage of no termination conditions. You have the advantage of a clear path, right? You have the advantage of having entered the market where it's most likely to continue. Guys, this is the one that breeds confidence through the memory of success. This is your trade that you should never miss. This is the trade that every time it sets up, you should be chomping at the bit to be a part of. When you enter at the top of the window because of the momentum, because of the clear path, your stop is going to go below that window of opportunity where that market should not go. And let's take a picture and do one more little definition of your window of opportunity. When that reversal bar starts, guys, you're looking from the top of the triggers to the bottom of the triggers, right? That's a pretty big area. But because trend trades come from areas, not just inside of triggers, your window of opportunity is refined a little bit. It's smaller than the parameters of the triggers. It's from the highest point of support to the lowest point of support. Because there's so much momentum on that higher time frame, because there's absolutely nothing in the way on that higher time frame, your limit order is waiting at the top of that window. Your initial stop is going to go below that window of opportunity where the market should not go. Anything that wins 70 to 80% of the time, guys, is mathematically obligated to lose 20 to 30%. It's a cost of doing business. You will take losers as a day trader. Guys, can anyone else hear me? Or is it just Joel? Awesome. So let's let Joel know. Cool. Stop where the market shouldn't go, right? If the market continues all the way down, we'll use this arrow. Whoops. If the market continues all the way down beyond that area where it's likely to continue, I want to be out of this trade. I no longer have that advantage. This is no longer my highest probability trend trade. Every time this market fills your order at the top of the window, mentally, be prepared for it to go to the bottom of the window. Be prepared to watch your P&L go against you. Be prepared to not freak out and jump ship because the rules are still met and you're still inside that window. Guys, this is a trade that I want you to catch every time it presents itself, because this is a trade when the conditions are met that typically wins 70 to 80% of the time. Once that market begins to move in the direction of your trade, guys, reduce your risk. Put it below the pivot, not below the window anymore. I see you guys taking 3, 4, 5 tick risk trades all the time because you wait for the pullback to that area inside of favorable large triggers. See how it overran the mid-band and went down to Fibonacci support? Still in the window, still the best of the best. But because you wait for that pullback, your risk is reduced. Because you wait for that pullback, your profit potential grows exponentially. Guys, this is your highest probability trend trade. This is the trade that has the advantages. This is the trade that teaches you to read your charts. This is the trade that for 20 days, through the duration of your demo, for your first 30 days of Nexgen, focus on grabbing these great entries, guys. Focus on getting these absolute best of the best. Focus on studying these absolute best of the best. When you see odds favorable momentum, when you have no termination conditions, and guys, look at this. Pivot, stop out, 3 divergences, full reversal, odds favorable. And this is such a good picture. Price didn't reach Fibonacci resistance. It came close, but it didn't make it. There's one of those tails. If I circle the tail, what does it look like on my smaller chart? Where on earth is that? 53. Man, the NASDAQ moves, doesn't it? Holy smokes, the NASDAQ moves. That news moved the heck out of it. Oh my gosh. That's why we don't trade news. Guys, there we go. Price didn't reach Fibonacci resistance. I have odds favorable momentum. It's coming from a termination condition. And that market pulled right back to support inside of favorable large triggers. Your job is to circle that tail and take that picture. Guys, does everyone understand what I did, especially new people? You should be doing this over the weekend. When I have odds favorable, when I have no termination conditions and I see a tail, circle it. If that tail lines up at support inside of favorable large triggers, it's a rules-based trade. Guys, look at this. From the top of your triggers to the bottom of your triggers, from your highest point of support to your lowest point of support, that's the window in which that market is likely to continue, most likely to continue. And it pulls right back to it, doesn't it? Your initial stop is down here. When the reversal bar prints, you can move your stop below the reversal bar. You end up with minimal risk. And guys, it finishes the move straight to Fibonacci and beyond. This is your high probability trend trade, guys. This is your best is the best. This is the one that you should never miss. Safia says with this many advantages coming from a termination condition, and look at that window of opportunity, she says wild horses couldn't keep me out of this trade, and she gets paid at the trouble spot and gets paid again at the second trouble spot. Safia, beautiful trade, rules-based trade. Notice that she used a checklist. Is the market coming from a good top or bottom? Absolutely. Does she have odds favorable momentum? Without question. No termination conditions? None present. Area for entry? You're darn tootin'. She used a checklist. She policed herself. She said, you know what? This is the best of the best. This is the trade that I should never miss. This is the highest probability trend trade that Mark rambles about every freaking day. So I'm going to put it in my spreadsheet. And I'm going to call this Safia's perfect high probability trend trade long. And I'm going to study this trade, right? It finally made sense. It always does, Safia. And I'm going to take that same trade and I'm going to paste it into my first page, right? I'm going to pretend like I took it. If I'm Safia, this is my job. I took it and it's a trade. It's a trend trade. What were my tops or bottoms? Did I have a termination condition that created a full reversal? Absolutely. I'm going to say strong bottom. Did I have odds favorable momentum? I sure did. What did the triggers look like on the 5-1? They were strong, increasing confidence in the trade. And then this is a little redundant. She won. And what did she do on her second contract? She won again. What happened? Kicked ass should be one of the options. Guys, this is a perfect rules-based high probability trend trade. Never miss these, right? So Safia is going to come back on Monday morning and she's going to go, what did I do? Oh my gosh, this was perfect. This was easy. This was effortless. And guys, that was my daily goal in one trade. I'm never going to miss this trade. If you didn't take the trade, you can go back and circle it and see how it was in fact a trade. Does that make sense to everybody? This is where the study comes in. This is where you build confidence. This is where you build trust. You do it through study, guys. You do it through repetition. If I scroll back again, odds favorable, we cleared the divergence line. Everything says down. This is 9:45 a.m. What did it look like? Was it a rules-based trade? Oh my goodness gracious, guys. It's a pullback to resistance inside of favorable large triggers. Let's do this. You ready? I'm going to take my cheater off. Here's an exercise you can do as well. Guys, everything says down. Odds favorable, small below the large. We cleared the problem. Give me a Y in the room if you recognize. Smalls are below the large, therefore I have odds favorable momentum. All of my trigger lines are below my potential trouble spot, therefore I have a clear path, which means that I have to look over to my 5-1, right? And on my 5-1, everything says down. The large triggers are down. The synthetics are down. The bars are down. The momentum is down. Both charts agree, and I'm missing out, right? Son of a gun. There it goes. I'm so sad. I'm not getting paid. Samuel's saying, well, I can just jump in, right? I can just hop in that market. Look at that momentum. And I say, no, wait for the reversal bar. And at the time of the reversal bar, guys, take your drawing tool and go from the lowest point of the triggers to the highest point of the triggers. And then refine it. Go to your lowest point of resistance to your highest point of resistance. And guys, this represents the area where the market is most likely to continue, right? So I put a limit order and I wait for that market to come. And I say, guys, this is my look. These are my rules. Everything is rocking it out here. And that market comes up and I'm getting excited. I'm going to get paid. And that market comes up and oh my goodness, I can't wait to buy a Ferrari. And that market comes up and life is good and birds are singing. And then they go without me. And I say to myself, man, I had odds favorable momentum and I had no termination conditions and I waited for the reversal bar and I created a window of opportunity and the market didn't give me what I wanted. And some of you are going to jump in. Who's jumping in so they don't miss out on getting paid, guys? Someone's going to, right? Someone's going to say, that's my money, they owe me this money, and they're going to get in all the way down here. And their stop has to be all the way up here. But you guys that back tested, that studied, that participate in class, you're saying, you know what? If I miss a bus, another one's going to show up. And that market's going down. And guys, look, there's another reversal bar. But Mark, there's a blue fib on the 5-1. Where did terminations come from? The 13-2. I'm hoping that this little blue fib gives me a push, right? So now I have a reversal bar. Is everybody with me on this? And I have a window of opportunity. And my rules are all still met. And I'm going to take a trade. And the market pulls up. And now I'm in this trade, right? Now I have the advantage of momentum. I have the advantage of a clear path. And I have the advantage of nothing in the way entering at the market. We're entering at the area where the market is likely to continue. And it pushes up against me, and then I get that magical reversal bar. Guys, if you were in at 15.014, look at where your stop is. That's your risk between these two yellow lines. From a rules-based entry, from the advantage of momentum, the advantage of a clear path, having the patience to wait for the market to come to that area inside of favorable large triggers. And what does it do after? Cha-ching, 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 right? It just pays you all the way down. When does the momentum subside on the 13-2? Not yet. So much so that I have to center my charts. When does this momentum subside? Up. That's the first time we start to lose momentum. Guys, it's easy when the charts are doing nothing, isn't it? It's easy to do this after the fact. It's easy to do it when there's no pressure, when you don't have to make decisions. That's why you do it on Simulator. That's why you scroll back and you look at these entries. That's why you take these pictures. Guys, this is why you create a database so stinking big that you never miss this look, that you create this confidence, this trust, right? That you study the looks so that they're easy. Because when they're easy, you'll never miss these, guys. You'll be able to, in a moment, look at your chart and say, price is up, momentum is strong, we reached an area of resistance, no trigger lines went through, no trade, rules not met, I'm going to sit on my hands. It's a bad top and it's directly into the midband. Sophia, large triggers are above the reversal bar marker. Midband is acting as a termination condition. Do you see how quickly this can happen? Guys, I did my study. When you do your study, it'll happen this fast for you as well. And what this means is that you're just sitting on your hands and you're waiting. You're waiting for the best of the best. You're waiting for those advantages. Because if you always wait for the advantages in the beginning, you're going to learn to read your charts. And guys, there's going to be a time where you know your rules so well that you know when it's okay to break them a little bit. You know when it's okay to take a shot at this one and to manage out if need be. But if you keep it simple in the beginning, guys, if you follow this simple checklist and all you're focused on is entries, the only thing you're looking for is the best of the best entries. Learning to get in at the right spot, because great entries create manageable trades. You create the ability to read your charts. You create the ability to recognize where it's likely to stop, where it's likely to continue, and where it's likely to go. And this basic skill set will take you beyond your wildest dreams as a day trader. Steal this checklist. I just put it in the room for you. And if you're brand new and you're a visual kind of person, here's the same checklist with pictures stolen, liberated, let's say liberated from the resource materials, so that you can visually see what a good top or bottom is, so that you have a visual reminder of what odds favorable momentum is, what it means to have a clear path, and identifying the window of opportunity, guys. Is everybody okay with this? I'm going to take a quick break. I'm going to go say good morning to my wife, stretch my legs, take a deep breath. I'll leave you with crude oil. And then, guys, when I come back, I'm going to start looking. Yeah, there's some serious gems in there, Paul. I'm going to start looking at your pictures. And before I do that, Philly, was it you that needed help with ATM stops targets? That'll be the first thing I do when I come back, is we'll talk about entering ATM strategies into NinjaTrader 8. We'll talk about setting in those stops and targets. And we'll even talk about activating a limit order to get in at the correct spot. I'm going to take about 5 minutes. When I come back, the second hour starts. Guys, if you have a picture, post it in the room. If you have a question, post it in the room. When I go back through your charts, guys, I do a lot of scrolling through this chat box. If I ever miss a question or a comment or anything that you need help with, just repost it. Let me know. Say, hey, Mark, you missed it. It was at 9:28, right? Go back and take a look. Let's get me some answers, and I absolutely will. I'll be back in just a moment. I'm going to mute the room. We're going to go mic silence. Trade away, guys. If you take a trade, post your pictures. Back in a second. Let's get this party going again. So we're going to start with NinjaTrader 8, setting in ATM strategies. I'm going to open up just a little crude oil chart here. Philly, are you with me? All right, guys, doesn't matter what market it is. So there's a couple things that you're going to do. First, make sure you're on simulator, right? We're practicing. Take those lessons. Don't try to be, don't use that silly phrase, well, I don't really learn if there's not a skin in the game. If I'm not losing money, I'm not learning. That's asinine. So to set up your stops and targets, guys, one thing that's great is Nexgen gave you all of these options when you downloaded. When you downloaded the workspaces, when you got the software, Philly, you should have all of these in here. So it's a 2 lot, it's a 4 lot, it's a 6 lot, 12 tick stops, 18 tick stops. Maybe you're trading NASDAQ or something. 40 and 60 ticks, 12, 20 and 30 ticks. So there's all these different options, right? So depending on the market that you're trading, if I'm trading crude oil, a 2 lot, 12 ticks, and it's going for 20 and 30. What does that mean? That means that if I get into the market, my stop is at 12 ticks, right? My first target is at 20 ticks. My second target is at 30 ticks. So that's one way to do it. Maybe you want something a little more custom, right? Maybe you're like, man, I don't want to go for 20 and 30. I want to shoot for 100 and 200. I want to keep it simple and focused. What you're going to do is you're going to click on custom. And when you click on custom, it gives you these parameters. Your order quantity is 2. That's exactly what you want, right? You want 2 contracts. But since it's 2 contracts and 2 separate targets, you're going to click add right here. It's going to give you target 1 and target 2. So target 1 should be one of your contracts. Target 2 should be your other contract. Your stop loss is consistent, right? So guys, in futures, it's typically 9 to 14 ticks, depending on the trade, depending on what's going on. 12 ticks gives you reaction time to put that stop outside of the window of opportunity. And that's the only reason. Some people are like, well, I keep getting stopped out at 12 ticks. 12 ticks gives you reaction time to put the stop where the market shouldn't go. So if this is crude oil and you're looking for $100, that's 10 ticks. So my profit target is 10 ticks. If I'm looking for 200 on my second contract, that's 20 ticks. So I have these in here. You with me so far, Philly? 2 targets, 1 contract each. Stop loss is good. There's my profit targets. So I'm going to save this as a template. And when I save it as a template, it's going to let me name it. So maybe I call this crude 100 and 200, right? Something clever like that. All I have to do is click save. Click OK. And then once I have it, that template's going to show up down here. And I can use that every day. So every morning when I'm getting ready to trade, I am making sure that I'm on simulator. I'm making sure that I have stops and targets in place. If this says none and I get in the market, I don't have anything to protect me. I don't have stops. I don't have targets. I don't have anything where the market shouldn't go. So it's important that you have those stops and targets each and every time, guys, because you're going to be able to pinpoint with amazing accuracy where the market is likely to continue. If you right-click below the current price, it's going to give you a buy limit option, right? It means that price has to come down to you so that you can buy the market with the anticipation of it going up. If you right-click above price, it prompts you to sell limit, meaning that if price comes up and reaches this order, my anticipation is that the market is going to go down. So guys, that's your little how-to. Setting up those ATM stops and targets. And then, as much as I love to give you guys fish, I also want to teach you to fish. So if you go to the education page and you click on the software user guide, your NinjaTrader how-to, there's an entire section on stops and targets. Guys, I'll go over these every day to make sure you're comfortable with it. Practice getting in the market. Practice setting up stops and targets. Go through that a couple times, right? Get good at it. Get comfortable with it. Great question. Awesome. And guys, what I want to see from you is I want to see your trades, right? Simulate, get in there, practice. So I'm going to scroll up to the very top of the room, guys, and I want you to see this. I have to go all the way to the top to get to your messages. I'm going to start clicking on the links that you guys provided. We're going to talk about what we see, what we're doing, and then we'll look at the live market off and on as well. So this morning, I do believe David B got us going, and David B asked, am I correct in my analysis? So let's go through the analysis. And David B, hopefully you're with me here. And hopefully you got a little clarity when we talked about termination conditions. So guys, he's asking, is this one of those pivot stop outs, right? David, you see how it's not? It's just a pivot, right? It's a bad top. It's not a strong top because the trigger is exceeded. This is just a reversal bar, or just a reversal that gets us down to that mid band. And this kind of bleeds into Safia's question. Well, if a bad top happens, if this pivot from nowhere kind of happens, not from a key area, the mid band becomes the first target. And guys, this is what you're watching. You want this mid band to break if it's a bad top. And then we also had that gap theory in play. So not doing anything right here is perfect, right? And then the market comes off of that mid band, which holds. The small triggers get above the large triggers. The large triggers are wide. And the small triggers are above these 1-to-1s, but the large triggers are not, which means 50% of my triggers are above, 50% are not. So David, you identified this perfectly as a 50-50 trade. Guys, this is your first medium probability trade. When an area has the potential to break, but hasn't yet broken. And you see that, and I don't think we talked about the 50-50 yet. You're going to see this, whoops, wrong one. 3 different ideas on whether or not an area is broken, whether or not the path is clear. No triggers means no trade, right? No clear path. Small and large through means that the path is clear. Go, go, go. When the small triggers break, but the large triggers don't, guys, this is what we call a medium probability trade. This is a 50-50 trade. Has nothing to do with your chances of survival. It's not a 50-50 coin toss. What it is 50% of your trigger lines have made it through the area. It is imperative that you have odds favorable momentum. Strong triggers break areas. So 6980 becomes an area with the potential to break, but the path is not clear because it hasn't broken yet. Does that make sense to everybody? This is going to be your first medium probability trade when areas have the potential to break. You can see out here, this area had the potential to break, but it didn't. Probably 3 divergences coming from right here. But it doesn't break. So guys, this is not a high probability look. It's a medium probability look. It means that this area has the potential to break with that momentum, and sure enough it does, and it does it twice. So he identified 2 50-50 style trades, right? Didn't go short, gap theory right into the mid-band acting as a termination condition. So guys, there's a lot of information on a chart that doesn't even have a trade on it, and this is perfect. You should be doing this every day. Mark, this is what I see. Am I reading it right? Which I will reply absolutely, or hey, here's the way to kind of refine that thought process. Joel doing market replay. I love this, reinforcing those great rules, using that checklist. Joel has odds favorable momentum. He has absolutely nothing in the way, and look at this entry right in an area inside of favorable large triggers. Takes it up for the win. Joel, beautiful trade, great read, awesome analysis. Nothing but advantages. Same thing here, guys. Small triggers below the large triggers. Large triggers are wide. They're angled in the direction of the trend. Why is what not into a termination condition? This one? Great question, Alex. Let me show you. So what's the recipe? What's the recipe for a termination condition, right? A recipe is price reaches the area and then the triggers don't break. And Alex, this one's close, but it hasn't reached the area. You can even see it on the smaller chart. So we got really close to the area, but we didn't hit it. Technically, by definition, it's not a termination condition. So what does this become? This becomes a target. And Alex, because we trade pullbacks, right? Because we're looking for the pullback, that tiny little bit of space from the top of it grows exponentially and gives us room to make some money. Does that make sense? It's a judgment call. You can choose to skip it. Alex, you can choose to skip it, and that's okay. And there's a lot of times where I'll take into consideration the strength of the triggers. I'll take into consideration where that market is coming from. But one tick, guys, you have to make... No, it's a good question. This is how fibs come to life. And I go back to this. If you choose to not take this trade, guys, I support your decision 100%. Fibonacci areas on your chart come from thousands of calculations, thousands of lines, thousands of projections, thousands of alternates, right? All of these things come together, and it's an area, not a line. Fibonacci areas, which means that all of these calculations, Alex, come together to give you this one line, right? So I look at this line, and when I'm trying to decide if one tick is close enough, I look at where it's coming from. Is it coming from a termination condition that created a full reversal? I like it. Does it have odds favorable momentum? I like it. And do you guys remember when I said in the very beginning that if every trade you take has odds favorable momentum, it creates an advantage and it'll kind of help cover some mistakes. One tick off with this much momentum going straight up, there's probably going to be a bounce, right? And it gets you to that area. Does it make sense, Alex? If you choose not to take this one, I support it 100%. But if you do choose to take it because everything says up, every chart agrees, everything looks good, the momentum is good, well, then you're going to manage it, right? You're going to manage this one as it comes up. You're going to reduce your risk behind the reversal bar. You're probably going to take quick profits. You're going to get to a zero loss level and see if they really did want to smack into that Fibonacci area. Does that help a little bit? Awesome. And guys, when you recognize advantages, it makes it easier to make these decisions. In the beginning, doesn't it make sense just to say, no trade, not yet, but I'll take a picture of it. I'll see how it reacts, and maybe that becomes my trade later down the line. Guys, that's what you're doing with the software, is you're creating this outstanding foundation where you recognize advantages in an instant, and then you will be asked to make judgment calls every now and then. You'll have to look at it and say to yourself, well, it's close. Maybe I'm not taking it. I'm almost there, but I'm not. Or you'll just say, everything says down, everything is strong. Look at this pullback to resistance inside of favorable large triggers, and the market continues down. Joel, great work on market replay. And here's that 50-50 trade, right? And if the trade is right, it typically does move quickly. Guys, 50% of your trigger lines are above 1-to-1s. 50% are not. What does that mean? That means that this area is not broken yet. It means that it's 50% above, 50% below. The market has the potential to make it through, but it hasn't necessarily. There's your entry, Joel. There's your no divergence pullback to the mid band. That's the best of the best on this look. And now we have divergence. Now we have a loss of momentum with a path that isn't broken. Guys, one of the things that I say a lot in this classroom is that if you're going to forfeit one advantage, don't forfeit the other two, right? If you're going to give up the advantage of a clear path because it's a 50-50, it's okay to tell yourself, man, my money is worth the perfect entry. No loss of momentum, strong triggers, tiny window of opportunity. When I talk about 50-50 trades, guys, when I talk about that medium probability trade, the idea is that you've identified the one small issue. The one small issue is a path that isn't clear. So don't let the issues compound with problems on the smaller, faster chart. As a new user, when you grow with the software, when you get more comfortable, you'll know when it's cool to take this trade, right? But now I don't have a clear path. Now I have a loss of momentum. Now I have small triggers working their way inside of the large. Guys, this is a lower look, right? You give it a little bit of risk. It's going in my head too, Joel. It's not just for you, it's for me. Guys, reviewing your charts every day makes me a better trader. This repetition makes me a better trader the same way it makes you a better trader. Repetition is key. Repetition, seeing the same thing so many stinking times that you can't help but begin to understand it, to see it clearly. Gary, everything says up, coming from a termination that creates a full reversal. Smalls break, large don't. You took one trade from the bottom from that termination condition. I'm assuming it was an HVA trade, and you just ran it all the way up, right? Maybe it wasn't. It's on the right side of the smalls. This is NASDAQ. 13.2 leads the way. You take a little unorthodox entry, probably waited for market flow signal, and it comes all the way up. It's a beautiful trade because the 13.2 leads the way, because it comes from a strong bottom, right? Guys, when you have a strong bottom, when you have crazy momentum, go with that momentum. It creates a huge advantage. Bobby T. Bobby T says, I have a bad bottom, right? Is it coming from a good top or bottom? No. Do I have odds favorable? Yep. And no gap. Nice job. No termination conditions? Well, it's a 50-50. Large below, small above. And then Bobby says, because I'm giving up a clear path, I'm not willing to take the trade with a loss of momentum. And it keeps him out of a loser. Great, great read, Bobby. And then Jose, you're welcome, Joel. Then Debbie, stand up, walk around the block. Take a deep breath. They'll work out of it. They always do. Jose called this an okay top. And guys, my first reaction is to say, Jose, there aren't okay tops. There's strong tops and there's weak tops, right? A strong top means that it was a no triggers through termination condition. And a weak top means that it kind of came from the middle of nowhere. Well, Jose, this is an okay top, right? So price reaches, the smalls don't really break, the large don't really break. Guys, this is overrun. This is a momentum-induced overrun of a Fibonacci area. Your large triggers roll, your small triggers roll, your large are back below. Yeah, it's not a strong top, right, Jay Solar? Because the trigger lines did breach it a little bit. But guys, this is Fibonacci overrun. It really is. One-to-ones, mid-band, triggers can't make it. You know you're not going long, right? And typically on your smaller, faster chart, you're going to see three divergences in this instance, right? It's going to kind of confirm that it was overrun. And then you get that full reversal and everything says down and no divergence and beautiful entry and money all the way down. Just because it's not a no triggers through top doesn't mean that it's not a great trade. It just means that it's not a great top. Still a great trade, still a beautiful entry, and profits all the way down. This is a beautiful trade, guys. When we talk about strong tops or bottoms, we talk about strong tops or bottoms, and it just makes you feel good. It gives you that little bit of an edge, and it says, hey, absolutely no trigger lines went through. Here's your edge. and you feel good about it. Everything's about advantages, right? Don't say less chance, Jay Solar. You're looking for reasons to lose, right? Yeah, no worries. If I say there's less chance of this trade working because it's a weak top, what I've done is I've told my brain, because the triggers broke through, man, I'm probably going to lose this one. And what it does is it clouds your vision. Jay Solar, that's the best look of momentum, isn't it? I mean, that's phenomenal. And no areas are reached. That's phenomenal. And that's an area inside of favorable large triggers. Holy smokes. Woo! I got tingles just thinking about it. Wouldn't it be disadvantageous to say not a strong top? I'm not looking for all the other advantages. And I'm not saying that this is what you're doing, but this is what a lot of people do, is they take one message and they try to spread it out over their entire trading plan. Just because it's not a good top, just because the triggers went through a little bit, guys, this is still a beautiful trade. So much so that if you look at the checklist, it even says you can take this trade without a good top or bottom, because these advantages, this recipe, right? These three little rules are what bring me success. So if these three rules bring me success, a strong top adds, it fuels the fire, right? A weak top can't strip how beautiful this trade is. Does that make sense? Guys, when I first started trading, let me run you through this. And I'm going to take everything off of here. I'm going to show you my mindset when I started trading, guys, and maybe some of you can identify with it, because this is what you do when you're new, when you start to learn the charts. Not a great top. I'm instantly, well, I'm not looking for a trade because it's not a good top. Guys, that used to get me, right? The triggers got above. I'm not looking for shorts anymore, and I would ignore everything else. And then I would say silly stuff like, well, I'm almost to the fib. I'm not taking this trade because I almost reached the fib. And what I should have been saying is, since price didn't reach the fib, it's not a termination condition yet. Oh my gosh. And then I would say, well, I almost reached one-to-ones. I probably shouldn't take this trade because it was almost a termination condition, and termination conditions are scary. And guys, I would miss trade after trade after trade after trade because I would convince myself that the sky was falling on things that weren't even rules. I would take myself so far outside of simplicity that I'd never find a trade. Has anyone ever done that? Is it just me? When you start looking for reasons to lose instead of looking for reasons to win, it's easy to do, right? But if you keep it simple, watch this. Here's the simplicity. Jose said, I have odds favorable momentum. I haven't reached the termination conditions. I have to take this entry. Period. How easy was that? The rules are met. The checklist is met. Guys, we're all human and we've all been in the same place. Nobody wants to believe that. Nobody wants to believe that anyone else talks themselves out of trades. I'm the only person that ever does that, right? And this is why I scream simplicity from the mountaintops. Because if you don't cloud your vision, if you go after looking for advantages, guys, life is easier. And if you keep your rules simple and you let it be rules met, rules not met, it becomes simple. And if you focus on the best of the best and you give yourself one option to have your rules met, it becomes simple. We looked at this one earlier. Let's look at it again. Guys, you have to have a plan. You have to know what it's going to take to get you into the market. How did he establish that exit? You'd have to ask him. But let's look at it. How did he establish the exit? If I had to make a guess, and I'm just making a guess, he said, holy crap, that's a lot of money. That would be my guess. As Jose said, man, that's a lot of money. I'm going to put it in my pocket and I'll wait for the next trade. You had to go to breakfast. But he could have said, and guys, it would have been a great trade. He could have said Fibonacci support, right? I'm going to take the trade off, and that would have been okay. But look at the momentum. Did anything say that area wasn't going to break? Not really. Look at the momentum into this fib. Did anything say that this fib didn't have the potential to break? Not really. Both are great exits. Sometimes, because of the strength of the 13.2 of your large chart, you may hold for a bigger move. And I bet it went down at least to that divergence low, didn't it, Jose? Because you had those triggers, you had a clear path, everything set down. A lot of people were getting in at the pullback to the area inside of favorable large triggers. But Jose, using fibs for targets is an amazing idea. Because the market may react, the market may bounce, right? Let me see if I can find this one that I took yesterday. And I sent it to John. This was my exit on a crude trade yesterday afternoon, guys. I got out at the low tick. I put my second target at a 13.2 fib. And I got out literally the low tick of the market. Do you know how good that feels to know where low has the potential to be? No, he made his money, K-Pops. He made his money and had to go to breakfast. No logical reason for an exit there other than I'm up a butt ton of money. Let's wait for the next one. $1,400 is a good day, isn't it? Is there any reason to give it back? Oh my gosh, Jose, shut it down. And if Canada's thawed out right now, go play golf. I'm looking. But didn't he have a loss of momentum right here at fibs? Check it out. You're going to love this. This loss of momentum right here took place at a fib. Yeah, he trusted the 13.2. The red-black line. Yeah, you're saying that the small triggers started working their way in. I see what you're saying. But K-Pops, look at the momentum on the 13.2. On the chart that establishes momentum, it is screaming to the downside. Yeah, this is the large chart. This would have been a great exit right here, right at 15,108, right at this fib. That would have been an amazing exit. That would have been a great money maker. Everything's good. But the 13.2 chart, the 13.2 chart says this market is still screaming to the downside, right? Still just blowing and going. So Jose held even though there was a fib, even though the smalls went inside, even though there was divergence, the 13.2 chart said go. Guys, this fib is a great target. And if you get out right here with two divergences at a fib, that's an awesome exit. But Jose says, I'm on simulator. I'm going to see if I can really trust that large chart. And he did. You could. You certainly could. I don't add to my position into a fib. Personally, I like a clear path. I don't add to my position if there's trouble in the way. But if I have odds favorable, if I was already short for some reason, and I had this look where he entered, hell yeah, I'm adding contracts. Because this is a 100% high probability trend trade. That's my absolute best of the best. Absolutely, I'm adding contracts there. If adding contracts is in your plan. Not into a fib with multiple divergences. That feels like financial suicide, even though the market still went down. Guys, this is crude oil. Termination holds. Weak triggers at a termination holds. Termination holding. You recognize a little range bound? Stuck between the mid band and an area. Guys, you have the advantage right now with Nexgen of rules-based trading to say, I don't have any rules met inside of this box. Maybe I should let it get outside of the box. Maybe I should let these areas that keep holding stop holding. Maybe I should wait for that odds favorable momentum. Maybe I should wait for that clear path. Maybe I should give myself the advantages that I learn about every day in class rather than hoping or trying to predict what the market's going to do. It's hard to do that, isn't it? Especially when it's been doing this for 20 or 30 minutes. You start wondering, well, it's red, I should probably go short, and you'll ignore the fact that it's a termination condition. And K-Pop, did that help you out a little bit? His exit was just his exit, and not necessarily any reasons going on for his exit. And then this is the one we looked at earlier, guys. When you understand momentum and you can read your charts well, you can create an opportunity to make money in small little base hits. Ron has perfected it. And I see a lot of you guys looking at his trades. Make sure that you study it. This picture right here, if you're trying to take his trades, you should steal it because he wrote his rules on his chart. You should go back and test them. See if you understand them, right? And then Safia, I think this is the one that I stole. Everything says up. And then Alex, here's another one of those, right? Where it's close. She's close to the fib. I mean, really close to the fib, right? But she's coming from a termination condition. It's a 3 divergence pivot stop out. What a great look. And this termination condition creates a reversal in odds favorable momentum. And guys, does everybody see the strength of the triggers as it approaches this area? Odds favorable momentum saves bacon, guys. She gets in and she takes profits at that first trouble spot, right? Using Fibonacci to get out at that first trouble spot. But look at the trigger lines as she comes into it, guys. She's zero risk with odds favorable momentum from a good bottom into this line. And she says with that much momentum, it has a good shot of catching that next area. And look at where she exited, 2 ticks below that potential high. Safia used her chart reading. She said, I know where the market is likely to go because of momentum, because of Fibonacci. And you guys don't realize this about me, but I get proud daddy syndrome a lot in this room. When you guys come through and take these lessons and put them to good use and turn them into profits, I get excited for you. Gary says, everything's up and my path is clear, so I'll get in at support, little pull back to it, stop outside of the triggers, keeps them safe, using Fibonacci for the first exit. And then with those weak triggers and divergence, pulls back to the area. But man, party's over, right? Weak triggers, he says, I'll try it, but I'm not going to hold it forever. And then fighting everything as you come back to the mid-band. Guys, this is Gary taking chart reading. I kind of dig it. There's that gap theory. Gary says, I'll take it on the right side of the smalls all the way up to those synthetic triggers and make a little money too. It fights trend, it fights direction. It's not a high probability trade, but it's great execution, Gary. Great chart read, great management. Guys, it doesn't have to be a high probability trend trade. Once you learn to read your charts, doors open, things change. And it bears repeating. John Novak, or Paul said, John's posted a lot of new videos, and there's a lot of amazing information in there. Guys, even if you've seen them all, go back and revisit them. You'll be amazed at the information that's available to you. All right, Safia, you have odds favorable, hasn't reached the area, strong triggers. Up as you get into that termination condition with all the trigger lines below, you said, I don't have the strongest triggers here. I'm going to sit on my hands. I like that. Great chart read. Odds favorable momentum. There was a clear path, hadn't reached the fib yet. Who is this? This is Joel. Joel, you say that with everything screaming down, midband's not a termination condition because the large triggers aren't a full bar away. You said, I'll take that entry and get paid on it. Absolutely. Nice job, Joel. Using that checklist, right? Policing himself. Love it. Termination condition, flat triggers, nothing to do, right? Just nothing to do. Take a picture of it, guys. Remind yourself there's nothing to do when I don't have a clear path. There's nothing to do when I don't have odds favorable momentum. Guys, it costs absolutely nothing to be flat. It costs absolutely nothing to not be in a position. All right, Jay Solar, let's get that feedback. Thank you for posting. Let's see what you did. And let's go through it. Fib does not show up on Ninja 8, but still 50-50. No termination conditions. All right. So let's look at it. You've got a termination condition, right? Creates a reversal right into support. I'm going to go all the way back here. From support, it pulls all the way up to resistance, those large triggers, nothing flinches, and now it's coming down. And you've got smalls below the large, and the large are above the area. So Joel, or Jose, Jay Solar, you recognize it as a 50-50, right? Beautiful recognition, awesome recognition of odds favorable momentum. So far, so good. You come in, there's your entry. I agree wholeheartedly, right? So Jose, can we talk about, are you with me? Are you in here? I hope. What a great picture. Okay. So I'm going to go through and I'm going to go through the 50-50 trade, right? Smalls are below, larger above. Whoops. And I'm going to use a checklist. And this is one thing that I really like to do. And I think that this is going to help you because, man, beautiful. Beautiful entry, Jose. Odds favorable momentum. Whoops. Let's make that a different color so we can see it. You had odds favorable momentum. You pointed it out. Great read. Beautiful read. Smalls outside of the large on the 5-1. Once again, it's a yes. Double the momentum. Feeling great about it. No divergence on the 5-1. Spot on, right? Coming from a good top or bottom. Once again, it's a yes. So you've got all of your conditions met. You agree? So beautiful. Your entry's perfect. Right there inside the window of opportunity. Absolutely beautiful. A reversal bar prints, and there's your stop. So we're on the same page so far, right? Everything looks good. You had the advantages. You were in this trade. Everything is wonderful. Jose, I would take this trade 1,000 out of 1,000 times. You couldn't make me miss it. So let's talk about the management side of things. Why do we talk about entries first? So Jose, divergence prints, right? Divergence prints on a 50-50. And I want you to think of it like this. So when divergence prints on a 50-50, this yes becomes a no, right? It's no longer an entry condition. Now you've broken the rules for getting into a 50-50 trade. So this is where I talk about the management. There is no strength of a 5-1 fib, right? I don't know. I'm not even sure what that means. On the 13-2, you have odds favorable, right? So let's go simplicity. Once again, you have odds favorable. You're coming from a good top. Every condition's met for your medium probability trade, right, Jose? We agree on that 100%. Beautiful entry. There's your stop. Oh, there it is. Did you just get it? So watch this. Let's go through the same process for entry from a management standpoint. You still have odds favorable momentum on the 13-2, right? You still, you no longer have the smalls outside of the large. You're already in this trade, but now because it's medium probability, we're looking for change that says that it may not work. So your small triggers have weakened the large triggers. So now this yes becomes a no. No divergence on the 5-1, your yes becomes a no. Jose, would you enter this trade with 2 no's? And this is for everybody, guys. So these 2 no's and this divergence right here, I'm out of that trade, probably break even. Does that make sense? Guys, management is the second bite of the elephant. Management becomes difficult. If the conditions are true, if your checklist is still positive, stay in the trade. But because it's a 50-50 trade, it changes it a little bit. And Jose, if this were a clear path, this divergence wouldn't take me out. It would have to hit my stop. Yeah. So when we take a minute, oh gosh, this is the best picture ever. Guys, this is why you have to post in class. This is a medium probability trade. And because it's a medium probability trade, let's go to the glossary of common terms. When executing medium probability trades, you're going to take these trades and manage them assertively. Jose, this is a brilliant time to take that 10 ticks, to take that $100 and manage assertively. If something changes, get out of the trade, right? Guys, to manage a trade takes chart reading. It takes the ability to process this stuff in the moment. This is why mechanical and methodical is so important for new users. Isn't that beautiful though? Because you could have gotten in and made $100, right? Gone break even, conditions change. A medium probability trade can still be a moneymaker. It just isn't always a home run. Jose, thank you for posting this picture. Wouldn't it be horrible to never post this picture and to just think that the market sucks and hates you? When really you can go through it pragmatically and say to yourself, the conditions changed on a medium probability trade. This requires some management. And then guys, you're going to keep these pictures coming and we're going to get better at this every day. And you said, and this is so important too, and I quote, only one trade yesterday, not a good one. What do you think, Mr. Solar? It was a good one. It was a beautiful trade with an opportunity for management. Strong work. Great job. Are you using the checklists? Guys, always use the checklists. It was a great trade with an opportunity for management. Your chart reading provides the management that you're looking for there. Absolutely. We're going to do this every day till you guys get to where you want to be, I promise. There it is, Joel. But I'm a big fan of language too. So Jay Solar, don't decide it's a bad trade until we talk about it, right? A lot of times people tell me, man, it was a horrible trade. Well, it was a great trade that just didn't work. And that happens sometimes. Don't beat yourself up. Let me beat you up. And guys, the odds of me beating you up is slim to none, right? We're just going to take it and turn it into lessons. And I think we've just about made it through the pictures. Safia, let's see what you did. You got stopped out. The area didn't clear. Let's see what happened. 84.26, 84.26. 1, 2, 3 divergences in the same location, Safia. That may have had a little something to do with it, don't you think? Small chart told you that change was happening on the large chart that you couldn't see yet. Does that make sense? 1, 2, 3 divergences in the same location lets me know that the trend may be changing. That one little safeguard keeps you out of this trade, keeps you out of this loser, lets you preserve the equity from those amazing trades you've been posting today. Great lesson in this one. Did everyone else get the lesson? 3 divergences on your small chart, but you didn't give it a chance. So rule number 3 says that your entry is at this fib and midband, right? You are 6 to 8 ticks above it. That may have been challenging. If there was divergence potential coming straight from a fib with no triggers through it, I'm probably going to wait and see. You don't have to. I'm at least going to have the advantage of bouncing off a fib, right? Make it pretty easy. Yeah. So, Safia, here's the other side of that coin. There's nothing wrong with your entry. You had reasons for your entry, right? So if you take that entry and a third divergence prints, that becomes your if-then scenario. I'm going to take this entry because of this look, but if a third divergence prints, I'm just going to go ahead and chuck it. I'm going to lose a couple ticks and I'm going to wait for the advantages again. Does that make sense? I'm not saying don't do it because I know exactly why you did it. But when this prints, it's okay. Psh, skedaddle, right? It changed. Same thing. Yeah, if it changes, guys, it's okay. You don't have to be married to a trade until one of you dies. If the conditions change, let it change. John Novak says divergence, right? And he had those 3 divergences on the 5-1, which confirmed it. And then he had odds favorable momentum, and he's at a mid-band, but large triggers are not a full bar away. And he says, triple dog dare you. I'm going to get in at the area inside of favorable large triggers, and I'm going to manage it tight as I get into that first target area because of the split between the large and the synthetics. Guys, does everyone see this? And this is why my brother and I argue a little bit now and then, and it's fun because we read charts exactly the same. Do you see how there's still areas inside of favorable large triggers above them? And he gets in at the lowest area. But there's always that potential that it may come up, so he's not risking it. He's managing it assertively. If this divergence prints, it's probably going to the higher area. Do you see how this becomes if-then? And guys, we butt heads sometimes because if you don't have his experience, you don't factor in that this divergence could push it to the next area, right? Guys, give me a why if that makes sense. This is why I talk about favorable large triggers. This is why I talk about small windows of opportunities. When you grow with the software, and I think it aggravates them, this is a beautiful trade taken by somebody with the skill set to manage, right? It's a beautiful trade taken by somebody who's done the research and can manage it assertively. And I want to go up, and I want you to guys see this as well. Guys, this is a beautiful trade taken by somebody that can manage assertively. And look what happened after he gets in at the area right there at the large triggers with the synthetics all the way down. Guys, this is the same trade going the other direction. It did close the gap, right? He had to exit with 3 divergences, and he said, okay, now it's closed the gap. Psh, giddy up. Now I'm going to go long and make money. Does that make sense to everybody? Everything revolves around chart reading. As you grow with the software, your chart reading is going to get better. When your chart reading gets better, you're going to be able to take and manage assertively. Until you can take and manage assertively, guys, it's okay to keep it simple. And this is a simple plan for consistency. And I've got nothing but admiration, respect, and praise for the abilities, guys. But every time I try to trade like my brother, I blow out accounts. He's got 20 years on me, 20 plus years on me. He sees things, it's like Spidey sense, guys. It's amazing. I will be able to trade like him one day, but right now, it's easier for me to keep it simple. It's easier for me to keep it mechanical. It's easier for you to keep it mechanical, to keep it simple. And you know what? I probably do. I probably see more than you see, right? And Bobby, you probably see more than somebody that's brand new sees. If you learn to read your charts, patterns begin to repeat themselves and they begin to ingrain themselves into your brain, guys. This is a plan for consistency. I put it in the room. It's a couple up. This isn't the end-all be-all plan, guys. This isn't the only plan. This isn't the only way to trade, right? This is saying, hey, you might be new and you're learning to read your charts. Let's keep you focused on the best of the best. Let's keep you focused on the highest probability, most advantaged trades while you learn to read your charts. Because if you do that, guys, you have a plan capable of making money while you continue the education process. Keep it mechanical. Never fight 13-2 direction, guys. Don't fight the triggers on the large chart, ever. It's a recipe for disaster. Personalize it. Take this trade plan and make it yours, right? This is K-Pop's trade plan. This is Philly's trade plan. This is Earl's trade plan, Bobby's trade plan. This isn't Mark's trade plan, and I'm trying to trade like Mark because you're not me, and I'm not going to pay your bills. My trade is the high probability trend trade. Here's a picture of the short. Here's a picture of the long. Show me a picture of that chicken dinner, K-Pops. These are the conditions that mechanically have to be met in order to get me into the market, right? All I'm doing is focusing on entries. Every great entry creates a manageable trade. So I have to manage that trade, guys. The most mechanical, methodical approach is the easiest approach for brand new users. You're going to adjust it as your abilities grow. And I'm going to open up the pictures for these. Guys, your initial stop is outside of the window of opportunity, right? When you enter the market at the area inside of favorable large triggers, your initial stop is where the market shouldn't go. You accept this risk as a trader because of the advantages that are present. You either get stopped out of this trade because it's one of that 20 or 30%, or you get a reversal bar. And if you get a reversal bar, you're going to reduce your risk. Mechanical, methodical. There is no opinion. If I get a reversal bar, then I reduce my risk. And I'm not going to do a darn thing. I'm going to sit on my hands and either my $100 profit target gets hit or I get stopped out for a small loss. And I accept that I have zero control over the market. But if that first target gets hit, if I put that $100 in my pocket, guys, now I have a dopamine kick. That's $100 that they can't take from me. That's $100. I'm going to go buy a steak dinner. I'm going to reinvest it, whatever. But I'm also moving my stop to break even. So now I have zero risk. I have the elation of being a winner, and it makes it easier for me to see if it hits the second target. Guys, I'm either stopped out break even or my second target is hit. If your second target is hit, guys, that's a $300 trade. That's a $300 trade with all the advantages. That's a $300 trade with nothing in the way, with strong triggers, with the perfect entry and mechanical, methodical management. Do that twice a day, guys. Right? What is that, $600? Do it 3 times a day, and that's $900 a day, right? But we're going to take losers. We're going to. So let's take $200 off of that for our small loser that didn't work. 3 simple, high probability trend trades, guys. Hit the target 3 times, lose a trade, whatever. $700 a day, guys. That's $350 a contract. Doesn't sound like a lot for you guys that are having those incomes. That's a $3,500 week. Guys, that's a $14,000 month. Keeping it simple, keeping it mechanical, keeping it methodical. Focus on the absolute best of the best. This is your trade, grabbing these entries for the first 30 days, guys. Your entire trading plan can take up a third of a sheet of paper. When it's time to add that medium probability trade, because you can read your charts, you can understand momentum, you can see change on that small chart, that's where that 50-50 comes in, right? There's your checklist for it. All these key conditions, this is what it's going to take to enter the trade. And when I enter the trade, I have to manage it differently than a high probability trend trade. If divergence prints, I'll exit the trade. Mr. Solar, that would have gotten you out of that trade, right? First contract's at the trouble spot, second contract 200. Guys, this is the most simple approach to trading to get you over the hump, if you will, to get you to where you're reading charts, to get you to where you identify change. If you commit to this, if you're posting pictures in class, if you're asking questions, guys, it's going to be difficult not to succeed. If you make a mistake on these rules, post it in the room. We'll talk about it. We'll talk about how to fix it. If you need help with management, post it in the room. We'll talk about it and how to fix it. Jose, 50-50 trade, right? Everything says up. The triggers are strong. We're coming from support. There is no divergence. You take the perfect entry, and it doesn't work. Jose, would you take this trade again if it's set up? That's what I want to know. Would you take this entry again? I would. Every time. Guys, when you stop worrying about the wins and losses, you're going to win more. True story. When you start focusing on the execution so that the consistency is there, guys, that's when you're going to find yourself being successful. You're never going to do that until you develop trust. You're never going to take that trade that just lost a second time, same look, until you develop trust. Trust is that belief, that firm belief in the reliability, the truth, the ability, the strength of someone or something. Trust in your methodology. Trust in your methodology, guys. Confidence, belief, faith, freedom from suspicion or doubt. I love that one. Sureness, certainty, certitude. Guys, when you take 1,000 pictures, you have trust. When you go through this checklist, this spreadsheet, let me get it back over to the other page. When you go through this spreadsheet, when you look at 250 rules-based entries, you develop trust. You get rid of distrust. You get rid of skepticism. You become confident in the methodology that has been proven by you to win more than it loses, and you take that trade every time it sets up. Gary says he took the same trade. Gary managed out for break even. Jose took a small loser. Tons of advantages, beautiful trades. It just is what it is, right? Alex, you say his 21 says no? I don't disagree. I don't disagree at all. But guys, I don't teach a 21. I teach 2 charts, right? Your only focus in the beginning, hey, K-Pops, have a great weekend. Your only focus in the beginning is this entry when the rules are met, right? As you grow with the software, Alex, you may say that there is absolutely no way I'm trading into a potential pivot stop out on the 21. Trickle-down theory, right? If this is a termination condition and this is a 50-50, it's kind of trickle down. And then you add in, if you want to add another chart, you have a reversal bar, antenna bar from an outer band, right? So Jose can refine his plan. I'll take a 50-50 on the 13-2 if my 21-3 isn't at a termination condition, right? If my market flow chart doesn't suggest that that market is exhausted. And guys, this is why I think in the very beginning, there's too many things to think about. It's that old Tom Cruise in The Last Samurai. There's too many mind. You're focusing your attention and spreading it so thin that you're going to miss half of it if you're not completely comfortable. But Jose, Alex made a great point. It's right into a termination condition. So, and this is how I think about it. If in order to take a medium probability look here, this has to be perfect, couldn't we say the same thing? If I'm going to risk this termination condition, then my 13.2 better be perfect, right? Guys, I love a 21 chart. I have it on every market that I trade. I like a higher time frame, but I use it exactly the way Alex just said. If my 21.3 says no, it's no, no matter what my 13.2 says. And the flip side is sometimes if my 21.3 is odds favorable and clear path, it makes me okay with these 50-50 trades. You can add information, but until you have that basic down, guys, it becomes hard. It becomes difficult. It becomes a lot of information that you have to dissect. Keep it simple. That was a 50-50 trade from a bad top. And a 50-50 trade from a bad top doesn't always work, especially with divergence, right? That was Jose's trade. You could defend that in court all day long. That was a perfect looking 50-50 from a termination condition. Guys, we're not in control of the market. This is the NASDAQ. That's a termination condition. That's a 50-50 with 3 divergences. A lot of you probably didn't take it. Now it's another 50-50 with divergence. It's no fun to sit on your hands, right? There's crude. The 50-50 with divergence didn't work. And look at that market go up. Do I not have an S&P open? I don't. I'm going to open up my S&P. I'm going to let that load up while I open up Debbie's chart. Debbie says, ooh, into a termination condition, right? You take the entry, and you also take it in the middle of the gap. That's a little nerve-wracking for me. Debbie, do you see how that fib was hit and the large triggers are a full bar away? For me personally, I won't tell you how to trade your plan. Waiting for that pullback to the large triggers when they're a full bar away gives you an entry somewhere right about where your stop is, right at those 1-to-1s. It helps you kind of make the decision. These 1-to-1s may be a better entry point because that's where price is going to smack into my large triggers from a full bar away. Does that make sense? That's using that gap theory to give you just a little bit of patience. And then if you're into that 1-to-1, if you're in at that 1-to-1 at 94.25, that's 2 points better, right? You're bored. Your stop's in the right place, and you've got zero worries as it goes back down. Adding an extra 2 points, you hit your 6 points a lot earlier. There's your 6 points right there. Boredom's a killer, isn't it? Boredom will set things sideways for you. Did everybody lose audio, or is it just Debbie? Everybody's good. There we go. What did you miss here? What are your rules, Dab? Are you looking for a 50-50 trade here? So let's check it out. Did you have odds favorable momentum on the 13.2, Deb? I'm going to let you talk me through it. Yes. Did you have odds favorable momentum on the 5.1? Guys, do you see how a checklist helps with the process? No divergence. No divergence, right? There's another yes. Is it coming from a good top or bottom? Absolutely. Dab, you have everything for a 50-50. Everything for a 50-50. But what does a 50-50 mean? A 50-50 means that this area isn't broken. Your small triggers are broken, but your large haven't. It means that you don't have a clear path. Are you with me so far on that? You're sacrificing the advantage of a clear path. Rule number 2 is not met. That looks past to you? As I always feel like an asshole when I do this. Dab, your large triggers haven't broken it, right? They're straddling it. Trigger lines are 2 lines, right? So that means that in order for the large triggers to have cleared an area, that's where they clear the area, down here, where both lines are through. Your large triggers are straddling it right now. They haven't made it through the area. Only one line of the large triggers has. So maybe this was just a little misunderstanding on the idea of a 50-50. In order for the path to be completely clear, both sets of triggers have to be on the other side. You know I have pictures for everything, right? Only the smalls through, it's a 50-50. You don't have a clear path. Both small and large break through. Now the path is considered clear. Both sets of triggers have to make it to the other side. So what you're looking at here, is a 50-50 trade. Are you with me so far on that? Did that clear it up a little bit? And to be honest with you, this is a beautiful 50-50 trade. This is perfect. So let's do this. Let's define your window of opportunity, right? That's pretty much it. That's where the market should continue from. Would you agree? The area inside of favorable large triggers. So would it be outrageous to have a stop just beyond that window, right? Especially on a 50-50. You don't have a clear path. It may hold. So it's okay. There's no reason to put 14 ticks on this trade. If it doesn't go from the mid band from the top of those triggers, to hell with that 50-50. I'm out. I don't want to be in it. My stop on this one, I'm probably out at 44.03, which means I have about 3 ticks on it, maybe 4. So 4 ticks on a 10 lot is still 40 ticks, but it's not 140 ticks. Does that make sense? I don't think you missed anything at all on the entry. I just think it was a 15. Fibs above 13 is, I don't know what that means. For stop, cool. No worries. And guys, this is another one of those instances where sometimes the message gets lost in translation somewhere. Every day when I talk about rules, and I mean every day when I talk about entry rules, price goes outside of the window of opportunity, or stops go where the market shouldn't, right? And I say that a lot. Stops go where the market shouldn't. If I can identify with no uncertainty, just like you did, a window of opportunity where that market should continue from, my stop's right outside of it. It doesn't have to be 14 stops every trade. Some trades it may be 5 ticks. Some trades it may be 15, 20 ticks. You have to make the decision. But by using that window of opportunity, putting your stop just beyond it, especially on a medium probability trade, man, you keep a lot of the powder dry like that. Guys, small losses are a normal part of a positive equity curve. All the way up here at 0525, that is so far beyond where I wanted to take this trade. I'm not keeping that much risk on it. Does that make sense, Dab? Hopefully that helps a little bit. Cool. There's your gap theory again. Price reaches that fib, pulls all the way up to the triggers. Debbie, there was your entry. All the way back down, right to the key area of support. M, let's see what you got, my friend. M says everything says up. Everything is strong. Everything is going to the upside. Small triggers are strong. And you've taken one of those momentum style trades that John Novak loves to teach, right? Every chart agrees. Everything says up. Momentum is strong. And you use those areas of support as a bounce point to get you into the market. M, this is beautiful trading. When a 50-50 fails, it loves to give you an opportunity the other direction. This is heads up trading. This is advanced trading. This isn't first week trading. This is beautiful. Nice job. Is it a high probability trend trade? No, it's not. This is a momentum style trade coming from an area that held. It's a beautiful trade. It's a little advanced, guys. If you're not comfortable with recognizing momentum in the moment, this isn't your trade. If you're not comfortable with recognizing that there was no divergence, that everything was rolling, that the area is held, this probably isn't your trade, and you have to be okay with missing it, right? You took the same, Alex. It's a beautiful trade. This is a great chart read. So where's your picture, Alex? Where are your rules? Guys, this is what I kind of want to reinforce. Everybody wants to tell me that they're winning. Everybody wants to show me they're winners. Nobody wants to show me they're losers. Or you just want to tell me, hey, I just made 50 ticks. Jerry S. is the exception. Jerry S. has been with Nexgen forever. He's reminding you guys that there's money to be made when you learn how to read your charts. But if you're not making money consistently yet, that's okay. Alex, it doesn't have to be. So I'm glad that you posted that. Guys, you don't have to show me a high probability trend trade, do you? M just showed me a trade that isn't a high probability trend trade, but we can still talk about why it's a great trade. We can still talk about everything that happened, why the advantages were present, and why it was such a solid trade. And we can even talk about how this much momentum, your exit could have been at 81, not 76, right? Because of that great momentum. Becomes a management lesson. It becomes an entry lesson. It becomes a chart reading lesson. Guys, I don't only want to see your high probability trend trades. I want to see what you're doing. Because every time you enter a trade, guys, you're doing something that's either going to win you money or lose you money, right? And if you're losing money and you're not winning consistently, let's look at it. Let's talk about it. That's why the class is present. Oh my gosh. Price clears divergence. The back end of his bar has to clear the trouble spot. That's Ron's rule. Jerry S., take care. Say hey to your boy for me. Odds favorable momentum. Everything says up. Get in, get out. Bazinga. Great trade, Ron. Guys, this trade looks exactly like the one he took earlier, like the one he took yesterday, like the one that he took 3 years ago. Maybe not 3 years ago, but at least a couple weeks ago. If I look at his last 100 trades, they all look the same. Every one of them, except that one, right? They all look the same. He's consistent. How do you know you're maturing as a trader? Guys, the first thing is you manage your risk, and then you focus on reward. You're able to manage risk through the advantages of the high probability trend trade. You're going to manage risk by having odds favorable momentum, by having nothing in the way, right? By entering at the area where the market is most likely to continue. This is how you manage risk. And then that process yields results. That process teaches you how to manage those great entries. This is a big one. You're completely relaxed when making trades. Guys, there's a switch that flips when you're comfortable with your rules. There's a switch that flips when you know you have these advantages. Your palms will stop getting sweaty, guys. You'll stop leaning into the monitors. You'll stop scrolling that chart left and right, up and down, all those different things, trying to will the market to do what you want it to do. You'll be patient. You'll wait for your trade. And if you don't get your trade, then you're going to feel, well, that's just not my money. I'll wait for the next one. And guys, don't trade for entertainment. This is a business, right? Don't trade to get your adrenaline fix. Go jump out of an airplane. This is the biggest one. You follow your plan. Guys, if you don't have a plan written down, you don't have a plan. But Mark, I'm brand new. How am I supposed to have a plan? Let me give you one. Let me give you something to follow until you can write your own plan, until your education puts you in a spot where you're really comfortable with everything, where you can create your own opportunities. But following your plan means that all of your trades look the same. Following your plan means that you're taking the same entry because the rules are met, not because of your emotion. It means that your stops are consistent. It means that you're using your chart reading. You're following a management plan. And then, guys, this is one of the biggest things that I like to add. And this one's a little touchy-feely. I get a little hippie. I am in the Pacific Northwest. Your worth as a trader and your worth as a person are two separate things, guys. You have to allow yourself a little bit of grace. You have to be okay with making decisions that aren't the right decisions. You're going to grow from it, right? Your trading has nothing to do with whether or not you're a good person. Your trading has nothing to do with your intelligence. If you're brand new, you're in kindergarten. Don't beat yourself up because you take a wrong trade, because you take a losing trade. Post that trade in the room and let's talk about how to do it better. Guys, I make mistakes almost every day. I started trading the NASDAQ because I was watching John Novak be so successful with it. And I started trading the NASDAQ, and I didn't take 100 pictures of the NASDAQ, and I didn't formulate a plan specific to that market that moves faster. And guys, I'm not going to lie, I got my ass kicked 20 ways to Sunday. I can read charts as well as anybody, but there's characteristics of this market that change how you have to trade it. You should put. And I had an epiphany. And guys, the way epiphanies happen is you're going to start by saying, hey, I shouldn't do this, but you're going to do it anyway, right? Hey, I shouldn't trade into a termination condition, but I'm going to do it anyway. Hey, I shouldn't fight divergence on a 50-50, but you're going to do it anyway. But then you're going to start to see that pattern repeat itself over and over. I know that I shouldn't trade into a termination condition, and I've been doing it anyway because I'm brand new, right? Guys, my epiphany, and I'm going to share this with you NASDAQ traders, is when you have a beautiful trade, an amazing trade, right, on the NASDAQ. What I realized, and I hope you guys can see this, is that if I go short here, fighting the small triggers, 80% of the time I took a beating, lost my money. But if I'm just patient and I wait for the close on the correct side of the small triggers, because this is a market with volatility, it increased my win percentage by about 40%, guys, which means that I got to stop taking trades twice, which meant that I got to get more out of my winners, my rules-based winners. You're never going to stop learning, and your plans are always going to grow. Keep it simple first, and let that, it's in the, oh, it's not in the room. Absolutely, I will. And Shogun, this isn't my wisdom. This is me typing into Google, how do I know I'm getting where I want to be as a trader? And looking at 20 different articles, and these are the common themes, right? These are 20 different people saying 20 different things. And those are the ones that line up. It's like watching Fox and CNN and trying to find out where they're consistent, and that's probably where the truth lies. So Alex, beautiful, right? Strong triggers, no divergence, everything says up. And you're using that mid-band as support. Absolutely perfect. When a 50-50 fails, and guys, 50-50s from bad tops fail a lot, and everything starts to roll and everything goes your ways, there's an opportunity. And when a bad top pushes all the way back to the mid-band and support, it loves to catch that next fib. Alex, this is a beautiful trade. It's not a high probability trend trade, but it's an outstanding chart read. So what I might add in the annotation is when a 50-50 from a bad top fails, I'm going to turn my thinking the other direction, right? What a great trade. What a great opportunity you took advantage of. All you have to do is post in the room, right? So Alex, this is one of those one tick off, right? I'm one tick off of support. How do I make a judgment call on whether or not I want to trade into that one tick off? Well, it's a 50-50 trade. Strike one. There's divergence on the trade. Strike two. Alex, this is one of those times when I respect the one tick off. Does that make sense? If I had a clear path and odds favorable, I would take that all day long. But because it's a 50-50, because it's divergence, I'm not hoping. Something's probably going to react. Guys, the light bulb is going to turn on for you every day. Every day you're going to take this class, you're going to hear the same darn thing, and you're going to go, oh, that's what he meant. Oh, that makes sense. Guys, I still do it. I'm in a constant state of being a student. I'm in a constant state of trying to be better at what I do. And guys, I get feedback every day. But I do know that when the mid-band is hit and the large triggers are a full bar away, it's likely to close that gap. Did anybody go short here? So let's look at this. Alex, this feels a lot like your trade, doesn't it? Everything says down, strong triggers, no divergence, pulls back. What's the difference? The difference, and I love this, is that the gap theory was in play. And you may not catch this right in the beginning. You may not go, oh, gap theory, don't take that short, don't take that shot at a momentum trade. But if you sit in class long enough and you hear the same thing over and over, there won't be divergence posting here. Oh, there was no divergence potential on the way up? Okay, but you don't want it, right? That would have been a better look. On the 5-1, you don't want divergence. You want it to be divergence-free if you take this trade. But the challenge for this trade was those large triggers so far away, right? During the pullback. But you want no divergence, right? Divergence prints. I might be a little confused here. I get that way sometimes. And I really think the point that I was trying to make is that these look very similar to the new user, don't they? These look almost identical to the new user. Doesn't work, pivot from nowhere, everything is strong, pull back. Gap theory keeps you out of the short. And then let's look and see if we can find any other differences, right? The trigger lines, there is no gap theory in play, right? The trend had already changed. You're looking up. No divergence prints on the pullback. It's on the correct side of all the triggers, right? So you start to notice these subtle differences that give you an advantage. When the price moves up to the inch, why would you want divergence potential? And I'm just curious. And then Jose, there you go, no divergence, gap theory, and it does exactly. And Jose, the HVA comes from a termination, right? So maybe a little misunderstanding of the rules. But I'm curious, Alex, why you would want to see divergence, right? I would want no divergence potential. I would want to say that there is nothing stealing that downward momentum. No divergence potential here on the 13.2. That would add fuel to the fire as well for a potential short, I think. Okay, thank you. I'm not understanding something. I apologize for that. Sometimes I don't. Jose, HVA line doesn't mean anything, right? Because you're not coming from a termination condition. This is adding information on a chart. You have odds favorable momentum on that range chart against the trade. You had the gap theory against the trade. You're not trading from an area against a mid-band that's acting as a termination conditions. I think you've done a good job identifying what's going on, but you didn't write the rules for why you would take the trade, I think. Yeah, you did. You got lucky. Without a doubt, you did. I love it when you guys get lucky, though. I'd rather you get lucky. Good stuff, though. But we can talk about it. But Jose, remember that HVA line doesn't mean a whole lot if we're not coming from a termination condition. It's just another pink line at this point. There's no rules supporting using it, especially with everything going against it. Yeah. Oh, have fun with your grandbabies. Enjoy your weekend, guys. Take care. Ron. Enjoy your weekend. Study a little bit, but make sure you do something for you. I'm going to have to go steal someone else's grandbabies here pretty soon. So now there's that indecision, right? There's that gap theory filled, and now nothing agrees. Nothing to do right now, guys. No trades. Weak triggers. It's a clear path, but it's ugly. There's a termination that's creating a full reversal, but until these smalls get above the 1-to-1s, I'm in a holding pattern. 90% of what you guys do is going to be just waiting, right? Guys, the whole point of today, of every day, is to remind you to keep it simple. Allow it to be simple. Learn to read your charts. You're going to see people taking trades that don't fit the rules. That's okay. They may fit their rules. I want you to show me trades that don't fit the rules, and we'll talk about it. I'll help you write rules if we need to. You're going to see people with an unbelievable ability to manage to take riskier trades, right? Because they're so good at reading their charts that they do that. Guys, if in the beginning your whole focus is simple, if in the beginning you're not doing anything other than looking for the absolute best of the best, it is going to grow your plan into something that is more advanced, something that is more almost predictive rather than reactionary, because you're going to recognize these patterns. Safia, everything says up with odds favorable momentum. Everything says up. The path is clear. Life is good. The entry is perfect. Virtually no risk. First profits at the trouble spot. And then you said, if divergence prints, I'll get out of the trade. Safia, this is beautiful. I would be hard-pressed to find a fault with that trade. I could make something up just to be mean, but that wouldn't seem nice, right? That was great. I love it. And missed it by a couple ticks. Yeah. Samuel, you already have it. So on the way up, you want the divergence potential from the up move. Okay, Alex, it makes sense now. I see what you're saying. All right, so Samuel, do me a favor. Go to your search bar real quick and type in tech. Are you pretty computer savvy? Are you okay with that? If you go to your search bar and you type in tech, you should have TechSmith Capture already on your computer. 95%? Safia, 95% rules following is pretty amazing. Samuel, did you find it on there? If you didn't, let me give you the link to it. Bum, bum, bum. Safia, can I ask you, does it make sense now when I talk about the process yielding the results? I don't think it clicked when I said it the first time. Did you have it, Samuel, when you typed in? Because we've got time. Let's get you to where you can take a picture. Guys, I say this a lot. I say the process yields results in most everything you do in life. Focusing on the process, and sometimes I say focus on the process, not the profits. And people take that as me saying don't worry about winning, and you're gonna worry about winning. But when you focus on what it takes to win, it gets easier. So Samuel, there's the link to get to it. This is what it looks like on your computer. And that same link will give you a video of how to do it, how to go through, how to copy paste that picture, how to get it into the room. But it's really pretty simple. When you open up your capture software, let's do it real quick together. TechSmith Capture, absolutely. It is the process and a journey. It most certainly is. A little bit, but you keep winning. Go figure. Patience pays off, doesn't it? I feel like that was one of those signs that you're maturing as a trader. You don't force or chase trades, right? You're following your trading plan. You're completely relaxed. Safia, you are the epitome of somebody that's maturing into a trader, maturing as a trader. Samuel, if I click this big red button that says capture, it's going to set me up to take a picture. I'm going to left click in the upper left hand corner of my big chart and drag it all the way down to the bottom of my small chart. When I release it, TechSmith Capture is going to give me some options. I can take a picture. I can capture a video. I can go back and take a different one. I can cancel everything. I can even kind of change the dynamic, right, of whether I want it bigger or smaller, and it'll go through. And then I just click the camera. And when I click the camera, up comes my image preview. It's hard to learn to enjoy doing nothing. Guys, I'm telling you, this is one of those proud daddy moments. It sounds weird. One of those proud moments, proud teacher moments. It's like watching your kids begin to excel. It's exciting for me. Once you take a picture, Samuel, and you have your image preview, start playing with all the different tools, arrows and squares. But the one thing that I want you to get in the habit of doing, guys, this is for everybody. When you take a picture, annotate it. Tell me your rules. Tell me what you did. Tell me why you did it. Tell me what you saw. Tell me how you felt. Tell me what fueled the passion. No worries. You can just download it. Follow that link. Download it. It takes 8 seconds. And then, Samuel, all you have to do to get that feedback is click copy right here and bring it over to the chat box and paste it in. So that's stuff that you can practice during the weekend. Open up your Discord, open up the education room, post some pictures in here, write tests on them or something like that. But make sure that you're comfortable doing it because next week I'd love to see pictures from you, right? I want to see you moving forward. I want to see you doing what you're doing. And if you follow this link, it'll help you with that a lot. And I'll put the link in one more time just in case it got lost in the shuffle. You want to be like Ron. Whew, careful what you wish for, Safia. Ron spends time at the beach eating chili dogs. Guys, S&P is caught in a termination condition, right? Going to Virginia. Nice. Have fun. Enjoy the long weekend, Ron. Hope you have a great time with the kiddos, and we'll see you when you get back. Here's that crude oil into a termination condition, right? Closes the gap, hits resistance, trigger lines are below. You guys are in a state of waiting for odds favorable momentum, right? Waiting for that advantage and a clear path. And then NASDAQ termination condition to the T. This would be what Jose calls an OK top, right? There's a little bit of overrun, but 1, 2, 3 divergences kind of confirms that it might be overrun. And now we're waiting. Is it going to hold or is it going to break? I don't know. I don't have any idea. Guys, that's it for me. That was your class. That's the week. Guys, this is it every day. Everyone that posted, thank you. I got to see a lot of new people posting in here today, and I think it worked out, didn't it? You said to yourself, hey, I'm going to go ahead and post and get some feedback, and oh my gosh, we talked about management. We talked about different looks. Guys, this is what we do every day. Please embrace the system, embrace the path. I'll be back Monday morning at 9 a.m. We'll do it again. We'll talk about rules. We'll talk about a plan. We'll talk about advantages. We'll do all those things that make you successful, that make it easy, that make it simple. And we'll look at your pictures and I'll give you feedback, guys, live. Every trade you take is an opportunity for feedback. Enjoy your weekend. Today's classroom will be up on YouTube in the next 20 or 30 minutes probably. And then if there's anything I can do for you, please feel free to reach out. I will see you guys on Monday. Be good, everybody.